What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Every Monday at 9:20 a.m. Eastern and Friday at 4 p.m., myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just past. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy.
Good morning, everybody, and happy Monday. I'm coming to you live from the middle of a park in Miami, screaming as people walking by look at me. But I'm enjoying it, and I'm excited to get ready for this open. This is Good Morning Fintel. We do this every single week, Monday at 9:20 a.m. EST. We have a great, recurring panel that you're seeing up here now, and we might bring in some more speakers later, like Peter Tuchman. But without further ado, I'm going to turn it over to my awesome co-host Evan at Stock Market News to get us started with the news from the weekend.
Awesome. Let's do it. So I'll keep it nice and brief as I can. It was a pretty busy weekend. I would say it's normal, nothing too crazy. We got a bunch of headlines coming at you. First one was from T-Mobile that actually came in pretty recently. It's not going to affect the stock much, but I did think it was really interesting. They talked about attempted scam calls in 2021 were up 116% from last year to all-time highs. The article was specifically about their security blocking thing, their scam and robocall blocking. It's called Scam Shield, which I have Verizon and they have a similar thing, but I still get a bunch of scam calls. They said that a total of 21 billion scam calls were blocked over 2021, which I think for everyone who knows and has been getting these, for as many that have been slipping through, there must be a crazy amount of scam calls going through or being initiated. Moving on from that, we have General Motors. GM also announced that they are extending their production halt of the electric Chevy Bolt through the end of February. It was originally supposed to come back sometime in January. Originally it was supposed to come back a lot earlier. The last before this extension of the production halt was in January, and now we're over into February. If you're wondering why this is happening, this was the Chevy Bolt was catching on fire a little bit back. There was also a bunch of reports you can't park your Chevy Bolt in parking garages overnight, and there was a bunch of weird regulations that came out around it. It was because of the fires. Rocket companies, ticker RKT, announced today they agreed to acquire personal finance app Truebill. They paid right under $1.3 billion. Fubo TV, I know that's a FinTwit favorite. They launched their Fubo Sportsbook in Arizona, so that's now live there. Continuing to move, we can get a futures look in a second, but the markets were pretty set to open pretty down today, a little bit over 1%. I saw the VIX was up almost 20% as well when I checked. Moving on from that, we have Spider-Man No Way Home. I actually went to go and see it, and I do have to say it was a fantastic movie. It was probably one of the best Spider-Mans I've seen. But the box office numbers came in, and it was the third largest opening of all time, both domestically and internationally. Domestically, it came in behind, for both of them, it came in just behind Marvel's Endgame and Infinity War. No Way Home had $253 million in its opening weekend box office sales. That's domestic. Infinity War had about $258 million, and then Endgame had around $357 million in its opening weekend. So it definitely was a good opening weekend for Spider-Man. Moving on from that, we have Oracle. They are reportedly about to pay more than $30 billion, which comes out to about $95 per share to acquire Cerner, ticker CERN. And now I am actually just seeing that Cerner shares are halted for news pending. So that looks like that's probably going to happen. That's about to be announced. Palantir and DuPont Therapeutics announced a partnership for DuPont to use Palantir's platform to help, and then this is going to be in quotes, discover treatments and cures for the most challenging diseases. So that's release talk or PR talk, but Palantir and DuPont are working together, keeping it moving. We have I thought this was an interesting tweet last night. Elon Musk talked about how much he's going to be paying in taxes this year, and it came out to $11 billion. And I saw a funny tweet this morning from Doug Boneparth, and it was Elon and I will be paying a combined $11 billion in taxes this year as well. So there's that. Keeping it moving, we have a couple major earnings. We actually have two major earnings after today's close. We have Micron, ticker MU. Wall Street is expecting EPS of $2.11 and then revenue of $7.68 billion. That's up 33%. And then the other one was Nike. which Wall Street is expecting 63 cents, revenue of 11.25 billion. That's up 0.1% year over year. And then I'll give you two more stories. The first one is going to be Google-owned YouTube TV and Disney reached a new distribution deal to have the Disney channels restored onto YouTube TV. So this was a developing story from last week, and on Friday, the deadline passed, and YouTube TV started to remove Disney channels, ESPN, ABC, etc., from the platform. And over the weekend, they restruck a deal to kind of keep the Disney channels on the YouTube TV platform going forward. So they already started putting those back on, so you should be able to see that if you do use YouTube TV. And then the final story is the S&P 500 closing at all-time highs. This is a little bit of a mute point going on a down open, but so far in 2021, the S&P 500 has closed at all-time highs at 67 times. I don't think it's longer possible to hit the all-time high of set in 1995 of 77 new all-time highs, but we are right up there as the second largest year for this stat. But I think that's a decent coverage of that, and I'll throw it back to you, Gav.
Awesome. Interesting stuff going on this morning. Like you mentioned, we are looking at a red open. I'm trying to pull up futures right now. My service is a little bit slower because I am hot spotting to what I am doing, but I see a lot of red. I see a little bit of green in a couple of areas like REITs and a little bit of sports betting, stuff along that. But even the green is just like basically 0% that it has moved. So as we roll into open here at 9:29, since my service is going a bit slow, I want to turn it over to Ben. I would love to hear, what are you looking at today? Are you going to be playing any downside? Just what's on your radar?
Basically just watching the NASDAQ to see if that low is going to hold or if that's going to get taken out. Then it kind of resets everything. 14,931.06. Most likely, the feel early is that it's going to get undercut. If it gets undercut, then my whole process looking for a follow-through day and a reclaim of that level recovery at day zero, which is what we call a start of a rally. Oops, sorry. We undercut that, and then, like I said, my whole process really has to start over. There's just a lot of negativity out there. Obviously, the news is not good, and this is a week that is traditionally a very bullish week. So hate to see some of these starter. They're small. But some of these starter positions I'm likely to get stopped out of early this morning and be back into 100% cash. And then, like I said, the whole process for me has to start over again. And it's kind of difficult the way I trade because now we have the holidays coming. So a lot of the things that I look for as far as volume confirmation and price confirmation is likely to be skewed because of the holidays as well. So just a rough opening this morning. I do have a few stocks, individual stocks that I'm looking at more to see how they act. WST is one that I'm watching. SIMO, one that I'm watching. A couple of home builders, GRBK, and Toll Brothers, TOL, to see if they kind of hold those pivots. They're pulling back in and retesting those levels. So just want to see if those hold. But it's more just to kind of get a feel of what's happening with the market and get an idea of how the stocks are acting, more so than wanting to be aggressive to participate at this point, if that makes sense.
No, it definitely does. It definitely does. Goff did get kicked there, so I guess it's not the beach Wi-Fi. Surprisingly, isn't that great. Ben, I do have to ask though, the bell in the background, obviously for the open, that didn't really sound like it was from TV. Do you have like your own bell, or is it just like a notification from your computer or something?
That's Thinkorswim.
Oh, okay.
That was the opening bell for Thinkorswim. I usually mute that volume. I didn't realize it was so loud.
It's okay, Ben. I appreciated it. It reminded me that the market was open.
Yeah.
All right.
I'm back up.
God, do we have you back up here? Perfect.
Yeah,
Unfortunately, a lot of red on my screen at the open.
Yeah, me too.
yeah. So it looks like my internet troubles are not from the poor Wi-Fi of my Airbnb and are just big problems with Twitter. I guess because I just got kicked again, unfortunately. So I kind of expect that to happen every 5 to 15 minutes for the rest of this call. So in case that I'm not talking, I'm sure Evan will fill in. I'll just kind of let him know if I get removed. But we are now into market open. Stock talk. What's on your radar? Are you playing any downside here?
Definitely playing some downside. It was my first week for the Discord, so I put out a really detailed watch list last night on the Discord. I can just kind of, I don't want to read off of it directly, but I'll just give you all just a general look. I mean, kind of the obvious plays today. Usually when we get, this renewed sense of fear that's based on previous catalysts, usually the obvious plays work on day one. I mean, I was talking on Discord saying, let's get long mRNA, OCGN, NVAX, BNTX, and as we're seeing, in pre-market, that seems to be working. Those names aren't flushing too hard right now. They don't have the strength they had earlier, but they're not flushing too hard. They're still up decently. OCGN's not as up as much as it was earlier in pre-market. I made a few trades there in pre-market, just scalped a couple percent, just trying to, play the bid ask on those earlier. I was up really early. I was up pretty much right at pre-market open at 3 a.m. So trading those a bit, those worked really well on the long side. On the short side, we saw that news come out last night about Royal Cruise Lines and about how they had Royal Caribbean, about how they had 48 people test positive for COVID at the boat that docked in Miami. So, I called the short on that side, basically was looking at the short to spill over to the other cruise line names, which we're seeing, CCL and CLH. And then I'd also expected it to spill over to the airlines, which it did as well. They are actually, so I called short on RCL, CCL, NCLH, AAL, DAL, and LUV. They're all down. They were down in pre-market. They're still all down at open. So, yeah, definitely playing short side in this kind of market. I would say overall, for the course of my trading career, I have been a long bias trader. I do prefer playing the long side. I do prefer playing the bull side. But, in a market like this where it's so sentiment driven, I think you're pigeonholing yourself by not playing downside on these stocks. So, yeah, absolutely. Today I'm going to see how long I let some of these play out. But today I'm definitely short on the travel names, long on the vaccine names. Coming into tomorrow, I'm probably not going to be holding any positions on either side of the COVID trade going into the Biden speech because, this was a pretty steep reaction this morning, especially in small caps. We saw Russell futures tank last night. I think they were down over 2% at the peak. And so, we might see some recovery and some bounce back today as sentiment gets processed. And usually, a reaction in either direction gets less steep as we get more competition on the bid ask in the regular session. But, I expect that trend to continue for the day, maybe even carry into tomorrow leading into Biden's speech. I really think Biden's speech is going to be able to turn this sentiment on a dime. I think if he throws water on the lockdown narrative, I really think that that's all the market cares about. I don't think the market gives too much of a shit about his opinion on vaccines or, vaccine mandates or if people should wear a mask. I think what the market is really looking for is for the administration's stance on potential lockdowns. And so, I don't know what Biden's going to say tomorrow, but I think if he throws water on that and basically says, look, like we're not considering lockdowns at this time, or he doesn't see an environment where this could become severe enough in terms of hospitalizations to, force the administration's hand, I think we could see a big rally and then kind of a reversal in this trend where you see a rebound in the travel names that sold off today. And then you see, a reversal in the surges we're seeing in these COVID vaccine stocks. So this is the kind of the trend where, I wouldn't count on this to last all week. I think it's really going to be important going into Biden's speech tomorrow to see how that reaction is and to see if it can flip sentiment on a dime. But, this is really similar to what we saw last week, in my opinion, going into the Fed. We had that selling pressure Monday, Tuesday, Wednesday, as soon as Powell kind of threw water on the fire by saying, look, yeah, we're accelerating the taper, but, we're not considering raising interest rates at all till that's over. And, we're going to continue to monitor the economy. And he kind of alluded to the health of the markets being a gauge for him to seeing the reaction to policy. And so I think he kind of kept his protective stance on the market, even though it wasn't as dovish as normal, maybe, or as dovish as people wanted it to be. I think that's why we got that rally at the end of the day, Wednesday. Obviously, had we not had the quad witching at the end of last week, I think there would have been a chance that post-Fed rally from Wednesday lasted into Thursday and Friday. I think the quad witching on Friday kind of, threw that potential for continuation out. But coming into this week, I think we're running into the same thing with that Biden speech tomorrow. I think it's all about narrative here. It's all about sentiment. This isn't a market where the indexes are moving on their technical setups necessarily. This is a market where they're just purely being driven by sentiment and the headlines, which is why we're getting so much chop, which is why we're getting so much unpredictability. The best technical analysts in the game have not been able to call the direction of the indexes, on a week by week basis because of how sentiment driven and news driven this is. And so I think it's going to continue to be that way, especially going into tomorrow. I think after Biden's speech, again, if he throws cold water on everything, we might get a little bit of green for the rest of the week, headed into that short week. We obviously don't have the market open on Friday. So maybe we get a bounce Wednesday, Thursday, if Biden's comments are reassuring. But, then again, if he does make the suggestion, look, we are keeping all options on the table, or says anything indirectly suggestive of a lockdown, I think you could get more downside pressure tomorrow too. So playing those themes, but playing them on a day-by-day basis, I think today was a safe day, especially earlier on in the day, to be long COVID names, short travel names. I'm not sure if that's going to last the whole week. Like I said, I think tomorrow going into that pivot point is really important.
Okay, very interesting take there with, how Biden could really turn this around. I definitely am worried that it could go the opposite way as well. With just how.
Definitely depends on what he says. Yeah, definitely depends on what kind of tone his comments have, I would say.
Yeah, it's super fickle. Okay, awesome. Matt, let's start over to you. Would love to hear a few minutes from you on what you're doing at Market Open.
Good morning. I completely agree with just about everything Stock Talk had said. It pretty much covered all of the key points of what we're seeing this week. Futures traded down all night. Every market around the world got bombarded. All signals are down. All things look bad. And we're walking into a couple of key things, not only in the news, with COVID being one of the main focuses. People know what happened last time in the stock market is just this looming feeling of not wanting to miss out on getting out of the way of something potential, right? It's a new administration. Then the last time we had shutdowns, obviously, when Trump was president. Now with Biden, it's an uncertainty what could be done and how, if there could be a shutdown. That's always the biggest fear. Now, as a trader, our job is always to try to, as an investigator, figure out what we think is possible and make a bet around it, not just wait for the news. And, my bet is always been they will never shut things down on a federal level here in our country ever again, because that will plunge us into a Great Depression we will never recover from if we can't even get out of the quick recession as quickly as we could because of the logistical problems. It would be a nightmare to imagine what would happen if that speech came with any kind of, yes, we're thinking about shutting things down for a month or two because of Omicron variant. So as a trader, I know I have a speculation, just like I don't think Powell is going to recommend we raise interest rates even at all next year, even though some of the speculation is they will, for the same reason. The economy is recovering so slowly that we just have to wait it out. And so those are my bets, at least as far as I was to flip a coin as to what I think is going to happen. But Wall Street, behaves in such a way where we are seeing downside because of the fear of just that happening, or pricing in the potential of that happening. Everything is bad this morning. We have a signal that we look at, which is just the amount of travel the VIX itself takes. And when the market opens at a certain spot and it's a certain amount of volatility that happens even overnight futures, it's always too dangerous to even start a trading day. So my rule actually is I get out, stay out, don't even start a day. When the VIX has moved more than $3, or VIX futures have moved more than $3.50 in the middle of a Globex session and opens beyond that level, our entire community shuts down. It's such a serious thing to not try to take.
a trade period, at least for my own trading, day trades. And now, of course, investing, you have value in something you find and you want to strike on it, different than what I'm talking about for myself in day trading, trying to scalp in this level of volatility when the volatility of the VIX itself is so high. Never a safe thing. So I'm not even looking for plays today. I'm actually out of bounds and probably going to enjoy my nice little day off today and watch the market burn a little bit. We have Wednesday, VIX monthly options expire is always a key turning point. Markets, especially the index itself, or in general, the sentiment seems to roll from those third Wednesday of the month. Each time it goes around, now because of Christmas, it's the fourth Wednesday this time. But we have a new paradigm almost every time leading into that Wednesday where the market kind of asks itself, okay, is this month going to be bullish or not? Running into that, I think we're going to have today down, maybe tomorrow. Futures may open down a little bit, but I do think probably by Tuesday, Wednesday, once the market has a chance to digest all the stuff that's going on, potential shutdowns in other countries, speaking our market, I think all that's going to clear up, and I think we might get a turnaround for the rest of the week sometime kind of middle of the week. But right now is not a time where I look for anything to play on. I like to sit down, reassess, be glad I'm on the sidelines. I'm totally cash and watch it do its thing. That key level on VIX futures, like I said, we watch anytime the Globex session moves more than $3.50. It's a very special number for futures in VX. That's just a red flag from the start. When the market doesn't like to do that, even during our equity session. When it's doing that in futures, it's even double bad news. So for me, I am personally going to kind of sit back. I'm trying to see if anything looks good. Nothing looks good, but I'm trying to see if anything looks like an opportunity either. And right now, it's just all things are kind of in that same boat. All things are red. COVID plays looked good at the beginning of the day. I like that Stock Talk had a thing where he was talking about, COVID plays were good and travel plays were bad, and all that stuff and laid out perfectly. That's what Wall Street is trying to digest right now, what we're dealing with. And so, for me, sit on the sidelines until Tuesday, let the market digest what's happening. It's a holiday week. There's not going to be a lot of people are going to be eager to make a lot of changes they haven't made already. But on the greater fundamental belief, I'm still very bullish from here. And we analyze it as futures traders. We look at something on the commitment of traders, a report published by the CFTC that shows the active positions in futures held by all large. It's a whole bunch of categories, and when you look at it, it really shows that even at these levels, the people that are short the market and covering are just as scared as people that are long the market and selling. For every seller, there's a buyer, and for every buyer, there's a seller. It's extremely and curiously liquid at this level. And we are seeing that with these massive up days and these massive down days, flip-flopping back and forth. It's just because there's not a lot of participation right now. And the few sellers who are sitting at their computers and making moves now are being hit by the other side of the coin, which is somebody ready to get out of a trade as soon as it goes in the direction that's less bad in the position that they're in. So the market is, in general, still very bullish-ish. And I'm saying that with like a kind of quotes around that, because it's not looking like that right now. But when volatility starts to go away and dissipate, my call is that we're still going up, and a lot going into next year, as long as we don't have any adverse COVID type regulation or anything else that's a general surprise. The market is very liquid here, which is always a sign of consolidation, and consolidating at a high is always great for a bull market.
Okay, very interesting take there. Real quick, Gerg, I see you in the crowd.
Real quick before you go to Gerg, I didn't want to interrupt, but I just want to give a shout out to Matt. I've recently got to know Matt, and he came in and joined my Discord as well, and he's just been dropping some education, some fire in there. Really, really skilled day trader and very underfollowed. So if you guys are in here and you follow me or you follow any of us, drop Matt a follow. He. For what the content he puts out and how much detail he gives and how knowledgeable he is, he's very underfollowed. So, drop him a follow and don't. And another thing is, don't. I know a lot of people on FinTwit do this, newer traders especially. Don't judge, a person's page by the number of followers they have. Like, I know Ben up here has a lot, and I have a lot, and Stock Market News has a lot, and Gerg has a lot, and whatever it is. But like, the number of followers you have doesn't make you a great trader or a bad trader. There's a lot of amazing traders on FinTwit who have a few hundred or a few thousand followers who are great. So, and Matt's one of them. So drop him a follow. I just wanted to say that.
I concur, for sure. Big Matt fan here. Okay. So I was just going to say, I can't go to Good yet because I don't see him as a speaker. But if he wants to come up as a
What's
speaker.
up?
Oh, there we go. Oh, you're up here now. Perfect. What's going on, man?
Pretty good. I'm just watching, right? Like I told you guys, till January, I'm adding nothing long term. So if I see a good trade, I might take a quick day trade. Other than that, I'm just having fun. Like it's so crazy to see everyone panicking every single day. Like, if you believe in your thesis, why would you panic sell? Like, if your thesis is still the same, and the reason you bought that is still the same, and nothing has changed so far, why would you sell? Like, makes no sense to me. Like, if you love something at 150, why would you sell it at $80? Buy more, right? If your thesis is the same. So, I don't get that part. Why do people sell something they're down 50% if the conviction is the same? Makes no sense to me. Unless you had no conviction and you bought it for the wrong reasons, you might cut your losses. But if you still have a strong conviction and your thesis is the same and nothing has changed about the company, why would you sell? It makes no sense. So other than that, no long-term trades for me.
Okay. Yeah, well put. I hear that. Definitely it makes sense when you're getting in. Because like that's I think goes back to what we're talking about when you're getting into a trade. It's very important to also have an idea of where an exit is for you, right? When you're going to sell. Because if it is a day trade, you need to know that fast. If it's a long-term trade, you maybe have a price target further out.
Yep.
But
Even to cut losses,
yeah.
right? If I have a day trade, I almost always have a stop loss. But if I'm in something long term and I believe in the thesis and I did my research, I almost never put the stop loss. Because I'm following the company 24/7, right? If anything changes, I will make my decision then. Other than that, I don't use the stop loss, right? I believe in my thesis. So, like, I believe in my research. So, I don't need to set the stop loss. But if I'm day trading, I'm just plan to keep something for 2 or 3 days, I will set the stop loss. Because you never know, right? In the short term, what happens. So,
I think that the biggest thing for me in using a stop loss from a long-term investor perspective, when you're looking at the market every day, you probably don't need to use the stop loss. But if you can't look at the market every single second of every single day from the long-term investor perspective, or most times at most days, then you probably should use that stop loss. And for traders and
no,
whatever,
if you can't check the market even once a week for like 10-15 minutes, just buy index funds. SPY,
I agree.
QQQ,
There's a solid group of people in there who probably have like 2-3 hours a day. Maybe it's at the end of the day, or like can kind of check their phones during work or a little bit. Who can pick individuals? I think they have the ability and the time spent to pick individual stocks for the long term. Not too many, of course, and have a nice base of index funds. But those people should be using stop losses. But Gav, I see we have you back up here.
Yep.
Do we?
Yep, I'm here. I don't know.
Perfect.
Just every like 5 to 15 minutes, it just boots me. It's very annoying. I'm going to have to figure out something to do with that this week. But regardless, okay, so we're keep moving in this market. I haven't seen a ton of movement in the market. You know, pretty much everything on my list is red, except I see like Crowd is green and XPDI is green, EDR, Playboy.
Yeah, and even look at Pfizer. Like, Pfizer seems to be getting all the money. On the week, it's up 10%, and on the month, 20%. And in the last 3 months, up 40%. Like with Pfizer, right? So, anyone playing that?
I did see this morning a lot of call flow come in.
Like I think Apple, the money, like the flow's almost been cut into half from 2 weeks ago. But Pfizer is just crazy. So I did sell all my Pfizer comments last week around that, I think 58, 59, but it hit 61.71 today. So this might be interesting this week.
One thing I do want to point to, I have no idea if this is going to happen this time or if this trend's going to continue, but I noticed this a lot last week and the last couple of weeks. With the way we open and the way we close were very different. There was a lot of days where we had green opens and red closes, and then red opens and green closes. I don't want to peddle anything like, oh, we're going to open green today. Like I know that for close green today. I know that for a fact, but I am watching for that, and there still kind of is that tone in the background that this could be a early morning fake out for rally to close green at the end. Does anyone think that that's a possibility?
Always a possibility. Hard to put a probability on it.
That's exactly what I was just going to say. You just never know. When everybody's leaning one direction, the market likes to fool the majority. And although as bad as things look and feel right now, yeah, you just can't really rule anything out. That's the one thing I've learned is to keep an open mind.
Definitely. I do agree. Ben,
I think we closed the week green, so let's see about that.
Okay, I love the Gerg predictions. Anything in there between? Any reasons for that, or just kind of the Santa Claus rally?
No. So that one, I think everyone on FinTwit seems to have some misunderstanding about that. That usually happens after Christmas, so the name is a bit misleading. It's usually roughly the last 5 days of the year after Christmas. So
I think it's the first 2 days of the next year, the next year as well for some reason. But that is in there as well. I know people love to talk about this Santa Claus rally, even starting like something like November 1st or whatever. But we will slide on from that. Ben, I know you normally like to take a little bit of time before you start trading in the early market, but is there anything that's catching your eye? I know the general direction is most likely one way right now, but yeah, is there anything you're seeing early market that's catching your eye?
No, I mean, EDR showing some relative strength, up 2%. That's kind of surprising. I actually just sold into that. Be outside of that, not really. I mean, PSTG, another one that was holding up well, only down 1.5%. Those stocks that I mentioned earlier, those housing stocks, TOL and GRBK, both of those moving below the pivots that I was looking for and looking to hold. So not much happening there. I'm also watching NTR. NTR sitting right on anchored VWAP off of the high. It's also got like the 10, 20, and 50-day right there. Want to see if that level holds. I kind of like the story there, the growth there. The chart has been holding up really well considering, the overall market. So that's one I'm keeping an eye on. And then the other one that I was watching, WST, down about just under 2%. It's not really doing much. SIMO did hold up well, tried to come through that. I have a descending trend line, a flag pattern there for SIMO. It tried to peek its head through there, but quickly got pushed back down. That's down just about 1% now. But tricky in this market. And that's it's one of the issues when the market's not healthy is even if you get what you're looking for, whether that's a breakout of a pattern or through a pivot or an inside day coming out to the upside, they tend to peak above those spots, those levels, trigger those orders, and then roll back over. So that's kind of my clue that, yeah, the market's still not healthy and I still want to stay on the sidelines and not get involved. You see them starting to push through those levels and they stick, they hold those levels and then start to make some progress. That's kind of what I'm looking for. That's what I want to see before I get back involved. The only other position I had, and I closed it for a very small profit, was PI, which is another one holding up really well. But I was slightly in the green. I've been in this, gosh, I think this is the fourth time I've taken this over the last few weeks. And I just went ahead and closed that out. So like I said, I'm back to 100% cash, just on the sidelines, want to see how the market acts today, what Biden says tomorrow. Like Stock Talk was talking about earlier, I think that's kind of, the market needs some clarity. The market hates uncertainty. So I think if we just get some clarity, that will certainly help. But I'm not willing to bet on what that clarity will be today.
We got a couple of questions on certain stocks. So I'm playing around. I don't really have the charts in front of me, but I know Matt. We were talking. One of my favorite shorts that I was looking at was Wayfair. It fell back under 200. I'm also looking for potential long on SOXL, which is like sitting on top of the 50-day. Any thoughts on those, Matt? And then I'll kind of go around and just like we can go through some more plays and stuff.
Wayfair still has a nice solid pivot at 200. I mean, it's resistance like everything else today. And I mean, there are no bullish positions on this that are overwhelming any of the bearish ones until about 250. So that Wayfair short is still going and still looking bad. And as far as it's funny when I look to kind of divert a little bit, I look at my heat map and I see everything that's up is like AT&T, Netflix, Pfizer, Walmart. I'm like, okay, yeah, it's COVID again. I just started looking at like Papa Johnson and Anheuser, like Bud, to see if those are the things that always trended up, right, when COVID was coming around and all the airlines are trending down. It's really starting to remind me of early 2020 when I look at the visualization of the heat map of what's green and what's red. So yeah, Wayfair obviously in what we'll call today, faux COVID day, Wayfair is just really bad, just like everything else in that boat. So I would say 200 is a really solid pivot there. With volatility being the way that it is, I don't see anything really recovering and breaking super high from that. But 240 is solid resistance. There was that 2 Wednesdays ago, I think, is when it started pivoting down from the last leg, and those shorts are still there and they're still holding, and there's still large options on dealer side in chunks. So we're not seeing any bull side to that whatsoever. What was the other one you wanted me to look at really quick? Let's type that in.
SOXL.
SOXL. Okay. I have a 55 target on that one. Let's see what the algo says. Actually, this is very much on the bull side, and it's getting some pressure from long buy programs. The 55 support. This is an interesting. This is interesting. Let me put this guy here really quick. This is okay. Yeah. So it has a similar look to what the NASDAQ is doing right now. You have similar 55 is support, and there's really nothing. You have kind of bullish support all the way down to the 40s. This one's looking pretty good, I guess, as far as everything else that's out there. But this is also a triple leverage. This one's, remind me which one this one is.
This is triple leverage semiconductor.
It's the semis, right? Yeah, it's triple. Yeah, so it'll follow. It'll typically follow what the Nasdaq is doing. So it has that similar look. As far as we have a gap from that about 59 and a half ish. It's if it breaks through that, it looks pretty okay. I wouldn't personally take any bets today until I'm really sure things are breaking out. But everything here does look nice and solid for whatever surprise this was to me, because NASDAQ doesn't have the same setup. NASDAQ is very, very, very clearly being pressed down from 382. The Qs have strong pressure against it on 382. So this doesn't. This says breaking out if NASDAQ like relatively passes through the same area. So it looks like the semiconductors actually are poised to look very good, I would think, going in. I mean, I guess that's my fundamental belief going into the new year as well, that's a great sector to kind of invest in. But even today, it doesn't look too bad from here. So, yeah.
Yo, very, very bullish news. Jim Cramer has COVID. SPY bounced.
Market's gonna rally.
Yeah, look at SPY rally now from that news.
What's the news that's changing things?
No, Jim Cramer, right? He has COVID.
You think? You're just joking. I thought there was actually something serious.
Right?
I should have known better that if I was going to ask Gerg about something, that it was just going to be like a troll like that.
Gerg, is this bullish for coin stock?
But I will say one thing I'm noticing right off the rip, though, is that trend that we were talking about earlier. I'm glad that I took profits on some of those right at the open, because that trend we were talking about earlier, short travel, long vaccines, that is quickly changing here. Like I said, it could change on a dime. ROIV and ABUS closed really strong into the end of last week. For those who don't remember, December 1st, ROIV, again, the ticker is ROIV for those who are not familiar. They won ABUS won a court case against Moderna regarding their lipid delivery system. And ROIV owns a huge stake in the company. And so it's been popping off of that. But I did not expect it to jump this huge at the open. So definitely almost completely out of that position here. I'm 75% out of ROIV already. It could go more. especially if this volume and theme continues. But this is not the kind of market where I'm going to play games and not take profits on a 35% runner at the open. So that's just a trade update right there from my side. I am not staying intact in this short travel long vaccine trade anymore for today. I saw Carnival go green, and that was a good enough indicator to me that the rest of these might flip green. Now we're seeing AAL go green, RCL is going green, NCLH is going green, DAL is about to go green, and LUV is about to go green as well. So that trend is definitely reversing for those who were trading that. This morning, it was working really well in pre-market and into the open. It's changing now. And most of these vaccine names are still kind of holding up, but OCGM looks like it's headed for the red, barring a major reversal. I mean, it was up 15-ish% in pre-market. Now it's only up about 2.5%. So that's something to keep an eye on here if you're looking to play the reversal in that trend. That is just now emerging. So if you think that's going to follow through for the rest of the session, if you're day trading this might be a juncture to get long travel for the pop out into the green, because keep in mind those travel stocks did close well last week. So, if this is going to fall back into last week's trend, we could see those travel stocks go up, close up 3 to 7%, and see some of these vaccine names that ran purely off hype this morning, especially the ones that are completely unrelated to the American vaccine campaign. Those ones could easily go to the red, in my opinion. So that might be something to watch here. I think Moderna probably, will end up closing in the green. That would be my guess, largely because, even though it's kind of given up all of its gains, it was up 9% and now it's barely green. I think Moderna has a reason to be up today, especially with that new data around the Omicron variant. Now, granted, that depends on how much credibility you want to give that, considering that it came from Moderna. This wasn't a third-party verified study on the lab data. It was purely from Moderna saying that there's a 37-fold increase in Omicron-specific antibodies, which, I went to medical school for 3 years, so I'm not like a vaccine, epidemiologist level expert, but, I'm pretty familiar with medical technology and the terminology as well. And it just seems to me like this is almost just a headline grab from both sides. And that's not even a political opinion. I'm just struggling to buy this narrative as like a trader and investor, like from a serious point of fear. And granted, I don't think that means that you shouldn't trade the sentiment, right? Like I always tell people, your opinion on the catalyst doesn't matter. What matters is how the market reacts to the catalyst. And I think people often confuse that. Like, when I'm tweeting, sometimes when I'm just purely tweeting news, like I remember the other day I tweeted about the Netherlands going into lockdown, and people were responding to the post as if like I was approving of the Netherlands being in a lockdown or something. But like people confuse their political opinions with, I think, their trading decisions sometimes. And I just think that that's a silly thing to do. Like, just think of how you think the market will react. Like, the reason I put out that watch list yesterday with the long vaccine short travel names was because I felt like at least right off the open we were going to get that sentiment, and pretty much for the duration of pre-market end to the open we did. But like eventually, the sentiment settles out and it has to find a reason. And like I really do believe that this COVID narrative, like whether we get let's just assume we get a deep correction in the indexes off of this Omicron fear. Let's say we get 4 or 5 more, global lockdowns from major countries, right? Germany looks like they could be on their way to one. Let's say that happens and we get a massive drawdown in stocks. Like, how many more times will the market buy into the narrative? And like historically speaking, and granted, I haven't been in the market for 20, 30 years, like, some other people, and I haven't been like, I have a mentor who's been in the market for 45 years. And like, he always tells me like, hey, you're being short-sighted because I've only been trading for 10. But in the 10 years I have been trading, like when there's repetitive catalysts like this, especially news catalysts or sentiment catalysts, like when they happen over and over and over again, the reaction from the market tends to get weaker and weaker and weaker and weaker. So like, I don't think the market will crash like it did, when COVID first started, in response to this, because I think the world is better equipped to deal with it. And I also think that there is, a part of the market, or at least a certain corner of the market, that believes that, in terms of equities, and again, I'm not rooting for COVID here, so please don't misunderstand what I'm saying, but I think there's corners of the market that believe, like in terms of equities, in terms of federal policy assistance, the fear of lockdowns or, the tapering and growth of the economy, like Goldman is now forecasting that because of Omicron and because of the quote unquote demise of the Build Back Better plan, that they're tapering their GDP forecast. If you get enough of that FUD surrounding, the risks of growth, then, the same thing comes on the table that a lot of people have been talking about. And I know remember Jay talked about this recently too, about how, going into 2023, is the Fed going to need a leash again? Is the Fed going to need the ability and the flexibility to come back in if we do have a massive drop off in growth and employment? Because as these bottlenecks get resolved, I read a Morgan Stanley report a few weeks ago that like temporary employment is up between 15 to 20% globally, just to facilitate these shortages and supply bottlenecks we have, right? Because you need more staff and employees to handle these logistical problems and the supply chain issues and the manufacturing issues. And so, once those supply chain bottlenecks get resolved, and our economy day by day gets more digitized and more independent, you have more entrepreneurs, you have a huge gig economy that's facilitated entirely online, you have social media creators. Like, we're getting further and further away from traditional employment. We have overhead risks to growth. We have a massive risk for drop off in growth purely because we're seeing an explosion in growth coming out of one of the worst global economic disasters ever, which was the shutdown of the global economy. So I think there's so much whipsaw here on the federal policy side. And really, like, what does the question become? Like, the market's ripped during COVID. So, like, is COVID in the short term and the fear of COVID a bad thing for the markets, but in the long run, a good thing for policy and a good thing for stocks? I don't know. And I don't think it's an immoral question to ask either. And I don't think it means that you're rooting for COVID or not rooting for COVID. I just think it's something that investors and traders need to consider. Like, where is the line where the market stops reacting intensely to COVID fear? Like, is it a global acceptance? Do we have to just end up classifying it as the flu? Is that what it's going to take? Or as long as it's hitting the headlines, will the market react like this? I doubt that.
First off, what haven't you done, man? You did med school for 3 years? I didn't even know this.
Baylor College of Medicine in Houston, yeah. So I was in like an early admission program, and I went there like out of high school. You get accepted, and then you have to like basically complete a set of requirements. So you can either do a double major or a master's degree. So I had a lot of credits, AP advanced placement coming out of high school. So I was basically a junior when I entered college, and so I did about a year and a half of undergrad. Then did my MBA online while I was living in California. Then went to med school for 3 years. Then left in my third year to trade full time, and now I'm trading full time. But yeah, so it's been a long road.
Life is a highway. Yeah, that's pretty crazy. Awesome, man. Definitely good questions you were asking there about, what is the market going to do? How is it going to react? And definitely not immoral. I think it's just, important for people to know, because at the end of the day, there's money on the line. So you kind of have to ask those questions. Okay, let's keep it rolling around. I also see Bobby Gattuso in the crowd. Nick, if you want to drop Bobby a speaker invite, he can come up and chat with us. Okay, I got maybe a few more names I can throw out there. I want to throw them out there first. Ben, I would like to throw a few out to you. So one of them is going to be AMD. We'd love to hear on AMD. Number 2 is going to be Tesla, which is also down today. And number 3 will be SE, which is continuing its fall.
Hey, no problem. Just a heads up, I keep getting kicked off for some reason. So
well, yeah, I think this is a problem that may be spreading.
Ben, you know what helps, Ben, is if you close your other apps on your phone. I've noticed that.
Okay, I'll give that a shot. Let's see, AMD right at the 50-day. So as long as it holds or doesn't, completely break down on big volume from this level, 50-day is 136.09. That's kind of right where you're at. So you want to see this level hold as support. Let me see where the weekly 10 MA comes in. You're at 1. Yeah. So it's just a level that we often look to as area of institutional support, and we want to see those institutions step in and support it here. I mean, obviously, the numbers for AMD look good. You're going triple digit on the earnings growth this year, and then 27% next year. So, there's a catalyst there on the.
Did he get booted?
I think he got
Mid-sentence.
Yeah.
Spaces.
Yeah, I restarted my phone, which maybe has helped, and I'm not hotspotting anymore to my laptop, Evan. I'm trying it, so we'll see what happens. Okay, let's give Ben a minute to get back in here. Hopefully we can get that done pretty easily. Bobby Gattuso, so you came up and joined us. What's going on, man?
Hey, good morning. Pretty good. A little bit of a down market day, but for the stocks I'm looking at today is Micron, and hoping for the best for those earnings in the after hours. I don't like to hold contracts going into earnings, but in this case, I thought it was worth the risk. Micron's been good to me, and I'm looking at the $90 calls, and it has fantastic open interest and some pretty heavy volume today. And in a down market, now it crossed above the VWAP about 9:45 and looks pretty strong. So just watching that for the day.
Awesome. Yeah, big shout out to Bobby. If anyone's unfamiliar, he also works with us on the Wolf team. We've been expanding the Wolf team a little bit, and Bobby helps make those awesome looking charts and graphs that y'all see posted in the morning. So if you are into technical analysis, you should definitely be following him.
Hey, Gav, not to interrupt, but you know what might help for the so I've been reading on the Twitter Spaces support that like whenever people are getting kicked off, like that the host and the speakers should close their other applications. So maybe we should try getting whoever is hosting on the Wolf account right now to do that. That might, I don't know if that's going to help, but it's worth trying because I see Ben got kicked off again.
Yeah, I mean, I don't know if it'll carry through, but sure, Nick, if you want to close out of your other apps.
I mean, again, I don't know if it works, but like I know
a lot of people are having troubles. A lot of people are having problems.
It's worth trying, right? No harm.
Yeah. I've been chatting in Discord with one of the Twitter Spaces people, and they said they opened up a ticket on this, and I'm going to bug them about it again today. Just going back and forth.
There were a few... go buy Twitter puts right now, just because of this.
Everyone, we're buying Twitter puts? All right.
What are you short today, Gavin?
Nothing. No trade so far. I might go short SE, right? If it goes under 197.
Well, I did long VAX, short travel, and pre-market, but I covered it pretty much at open. But that trade's like changing now. All the travel's going green.
Yeah, I have no plans to rush into anything, right? If I find something good, I will hop on. Otherwise, even if I don't do anything, I will be good. I'm happy to wait till January, right? Till the market is less choppy.
A couple stocks I own are now getting closer to green. Nvidia is up about 0.7% now. I saw Uber cross very, very briefly into the green and then slid back a little bit under. But the majority of the stocks are definitely still red and staying down there. But there's a couple ones trying to get to green right now.
CrowdStrike's actually forming a pretty nice base here. So, Matt, let me throw those two over to you. The ones that I was asking about. So SE and Crowd.
SE? SE. Okay, 1 second. Actually, just to go with that, I know we talked about SoFi before. It's actually one of the things that looks surprisingly bullish out of everything else. It's all signs are bullish on that one particular on that ticker, and I just had that up whenever you called my name. SE looks like we have. I'm pulling that on my charts really quick. A 200. Both monthly and weeklies consolidate. There's buy programs active here. This is really strong. But everything's still kind of the bear side of the market on that guy. It's resistance all the way to 300, but it's getting some short-term sentiment change. I'd say that, it's sandwiched between the bear side of the market and the type of options that are on some of the positions that are being held in this. And so that's what hedge pusher is looking at. And so the 200 support, but, anything up to 200 to 300 is all just large short positions that are just sitting there on this. So when setups are looking like that, I don't like to take the breakout long. I try to see that the range and try to maybe play inside of the range. But, this SE doesn't have any I guess the bull side doesn't even start till 320. I mean, it's still depressed on the bear side a little bit, but it's going to sit at 200 for a little bit for maybe the next couple of days. So if it breaks that, then it's a continual fall, and there's no support till about 150 on this guy. So what's the next one that you got?
Yeah, well, on that note, I'm considering, I have a decent sized position in SE. I am considering if it was to come under 200 or to come near that, I would take perhaps a short hedge on my position.
It's wide. It's very illiquid between 200 and 150. There's really nothing underneath it. So it could fall. It could, not to say that wouldn't be bearish, just be that there wouldn't be any previous support that's still active there. So until about 150, yeah.
I like that.
One funny thing that I was going to say, do you guys remember, I think it was January the 25th, where that was the GameStop AMC day. And if you guys remember the saga of that, when those guys had those massive squeezes on that one single run-up day, the very next day, the S&P and the NASDAQ completely crashed out, probably to force liquidate some shorts, right? If you're in a margin call and your shorts are upside down and you're getting squeezed on GameStop, well, the next thing the market's going to do is punish you the very next day on everything else you hold to lower the price on that, because they know you have to sell to raise money, which is really funny because on Friday when AMC had that really awesome, like crazy squeeze. Yeah, I'm not on the AMC train, by the way. The disclaimer there, I think AMC is valuable at $0, just like Gav says. But at the end of the day, I put this quote in my Discord. I was like, AMC squeezes, market's going to crash on Monday. And everybody was like, haha, that's so funny. And then futures have like the worst night in, the last 6 months the very next day. So, maybe there's some, Twilight Zone music plays here, but maybe there's some AMC squeeze correlation to go with. What is your next ticker that you have for me to look at?
I actually want to make a point real quick on SoFi.
SoFi. Yeah, SoFi actually is really
I think he wants you to do Nvidia, but also SoFi. Sure. I was just going to say on SoFi, I saw people at the end of last week that were selling the 1250 puts, and I thought that was pretty smart.
Yeah, it's SoFi completely gained support. I think as of last Friday, 15 became really it switched over, and SoFi, 14. There's large bullish positions on 14 right now. Buy programs active at 15. Gamma's positive on the net sum of dealer positions, 15 plus. But yeah, 15's good for SoFi. So even 14's decent. So that looks like a good one for today. Nvidia, let me pull this up and see what Nvidia looks like. It's interesting because I'm not doing anything today. I'm not taking any positions. One of the things, and I Stock Talk said earlier, was that it's always kind of a long-minded trader, and I'm a similar boat. I like to look for long trades. I don't like to short unless everything is bear market and it looks short. Like all my calculations are like short, short, short. I don't like to try to guess short or pick shorts, and for the reason that because if you've traded long enough, you'll start to know that long trades typically are less volatile. There's a whole correlation without going to the whole thing about what causes the VIX to be the way that it is. But typically as a put to call ratio is almost always greater than zero on the main index products. You tend to see volatility go up when markets come down because when the opposite's true. Volatility appears very rarely when markets go up, usually at the end of a short, like a large sell-off. So when it's very volatile, short positions are just harder to manage. Day trading, swing trading, anything. If you're investing or long-term shorting, you take a lot of heat. You have to buy options, costs a lot of money, and your timing has to be right. And it's really hard to swing a short to bet that something's going to fall. And in day trading, it's even worse because volatility makes your position sustain so much more drawdown if you pick the wrong place to short from. So it's a lot more of a headache to get in the short position. So people ask me, like, Matt, where are you shorting from? Everything looks bad. Where are you shorting? I like to say, well, I'm sitting out. And I sit out and I watch other people struggle and try to make sense of the market. But if the market falls and I'm not in the short, then I just tell myself I can get in things cheaper. And, I'm gaining alpha against the market without having to take any risk. So to me, that's how I like to trade as well. So I'm certainly not taking any shorts today, even though some of these are the day opened up really bad for a lot of the market. I don't flip flop and look for shorts. I just wait for things to stabilize and come back bullish when the time is right. So Nvidia, And Nvidia kind of looks like everything else in that sector as far as, manufacturers go. It looks just like SOXL. It looks just like the Qs. It has filled its gap from yesterday. 287.5 looks like resistance. 285 is resistance. So yeah, Nvidia unfortunately is going to hit a really strong wall at 285 across the board. There's you have negative gamma against dealer positions there. You have bear side positions 285. It's 290 break for it to go. So Nvidia is probably going to cap out here very soon. And stocks like this, I like to wait until they do get a break before I try to bet that they will. And with 290 being that key level, it needs to push through at least for today. That kind of supports my thesis of just I'm going to wait a couple of days before I start finding some good longs. Volatility like this, it's better to be right than it is to be first because you don't want to be stuck holding a knife. So while it looks good at the open to fill the gap, I think it peaks here just like everything else that filled their gaps. So, yeah.
Okay. SoFi's still running too.
Yeah, SoFi's awesome looking. It's like the only thing that looks good that I've looked at today.
Yeah, I mean, anybody shoot that in the 14s. Nice pick. Real quick, before I go over to Bobby, to everyone that's listening, we've already been running for over an hour. Crazy how fast the time is going here. Loving this panel we have up here. We've been doing this every single week together. Please make sure that you are following the accounts that are up here. They are amazing. You have Matt, who just spoke, awesome futures.
Did he just cut out?
Yeah, I think he cut out again.
I think he was
That's a
saying
big rip.
Matt, the most handsome futures trader in the world. That's what he was saying. Cut out.
I did hear it coming out of his mouth. I heard "hat," and then he cut out. So it had to have been handsome. But I'll continue with this. Just make sure you're following every single one of the speakers up here. Stock Talk gave Matt and TSDR actually, who's not up here, but a pretty big shout out earlier. Great accounts. Bobby, I've actually met in person. Great trader. I've seen him on Twitch a little bit. Great follow. Gavin, Stock Talk, Ben, Juicy. You guys, you know every single one of them. So make sure if you're not already following them, what they're saying here is great content, but their tweets are even better. Can you hear me, go?
Yeah, I'm back. That was annoying.
All you. I kind of got the shout outs out for you. But,
awesome. And
I thought that was maybe going to the Google Calendar, and I didn't get that.
It could roll into the calendar. I don't know what's happening with Spaces. They gave me some hashtag to tweet out from we're having problems. I'm going to drop that in like 2 minutes. I'm going to go and look at that. And then hopefully everybody in this space or as many people could like hashtag and tweet that out. That'd be perfect. But yeah, I think if Evan got around to those shout outs, also the Wolf account's almost at 40K. If anybody could help out with that, we're like 150 off from 40K. I would love to get that account there this week. And then also on the calendar real quick. So we have created what we believe is the best tool for finding good Twitter spaces, especially in the areas of finance. So if you're in the audience and you like to learn about things like technical analysis, growth stocks, crypto, NFTs, anything that you can invest in, we have built out a fantastic tool for finding these. It is a free public Google Calendar that all of my spaces, Stock Market News Spaces, and Stock Talk Weekly Spaces are on that calendar. All you have to do to get on it is just drop into my DMs, the Wolf DMs, or Stock Market News' DMs. Either one will work. And just drop us your Gmail, ask you on the calendar, say hello. We love having people drop in there and shouting, doing a quick chat. If you want to be on our newsletters, you can ask about that too. But no pressure. But the calendar is amazing. All these tools are free. And we have like 11 spaces already lined up on that calendar this week, actually 12. So you definitely don't want to be missing out on that. So once again, just shoot that over to us.
Are the rumors true? Of To The
What'd you say?
calendar to you? Is that true? People from To The Spaces use them to you?
Yeah, that is.
Are
that,
those rumors true? Anything to the rumors? Yeah.
It's true. The rumors are confirmed. Over 1,600 people, including multiple people who work at Twitter Spaces, are on the calendar because they know that it is the tool and the best place to be. So if you're in this audience, you're not on it yet, try it out for a week. Go ahead, DM us. We'll get you on there within 24 hours. You can always unsubscribe if you don't like it, but just like hop in, try it out. Why not? You might love it. With that being said, Evan, anything else you want to add to that, or should we pop over to Bobby?
That was perfect. Keep it moving.
Okay, Ben's also having a lot of troubles getting on. So I'm going to go find that hashtag, and Bobby, going to you.
Okay, cool. Hey, Evan, thanks for the kind words. I was just going to let you guys know I'm looking at DocuSign as well. And if anyone's interested for call options for this week, the 160 calls, they had about 7,000 in volume today, which is pretty heavy, considering the open interest was about 1,900 on Friday. So that's one I'm also watching. Also, kind of makes sense with the Omicron variant play, and also obviously Zoom and some of these other ones like Pfizer and Moderna. Those are the only ones I'm playing into, and just you got to be careful watching the market because it can go against you pretty quickly. Back to you.
Oh, the awkward silence makes me think it's another kick. Oh, or he's trying to find the hashtag. But
if you wanted another pick, I'm trying to think. Back to Micron, I do like those calls. So if anyone's interested, but earnings after hours, and you never really want to take a position going into earnings, but this one has really good liquidity, so it's very, very interesting to me.
I know Nike has earnings as well after the markets close. Gob, do we have you back up here?
Yeah, for the moment. As we work through this, I don't even know what I'm going to do with all my other spaces this week. I might have to figure something out around that. Evan, you might have to be the fill-in moderator all the time. But yeah, let's, I guess, just keep it rolling for now. So I see Juicy's up here. Juicy, would love a few minutes on what you've been trading this morning and how everything's been going, and if there's any names on your watch list.
Hey, man. Thanks for having me on. It's been quite choppy, man. And I like to say, again, my DM is full. Yo, what we buying today? What we shorting today? What are you trying to do? For me, it's the same thing like I always tell you. Like every day I come into the market with a strategy. And if my strategy doesn't say do this or do that, I'm not really trading. Like today, my only trade was Pfizer, and I had a trail stop, and that kicked me out for about 20% gain. And that's it, one for one. This market right now has no direction. Intraday, there's no direction. Now, all the newer traders are coming in trying to short this market, but the worst thing you can do is really try to open up a short on a big gap down, right? A lot of times the move's already done, right? And that's what we're seeing here in SPY. We got this gap down, sideways movement. We can't find a direction, and now you're short. Nah, that's not how you do it. Like the proper way to trade is to stick to a consistent strategy and know that you don't have to be in the market every day. Like me personally, I'm walking to the market. Like today, I had no desire to trade. Like I did not want to trade. And then Pfizer hit my plan, so I had to take the trade. But besides that, I'm one for one. I'm chilling. I've instructed my team pretty much to walk away. And even if you miss something, like just say, like I missed Netflix. I had no trigger on Netflix. You look at Netflix on the intraday chart, it just took off and ran. No trigger, no setup, no nothing for me. So I just let it go, and I'm cool with that. And that's what you have to do as a trader, be able to sit out moves or not be in the market and have some type of checklist to get you into the market, or you won't be around for long. I'm telling you, if you don't follow a plan, you're not going to be around for long. Even if you're making money on the short term, you're not going to be around, not going to be in this game for a long time without a plan. So for me, like I highly recommend just sitting on your hands. I'm not looking to swing anything this week. Let's see what happens after Christmas, going into New Year's. But for right now, it's pretty much a neutral market, and I'm just chilling.
Awesome. Thanks, Juicy. Appreciate that. Yeah, definitely. It seems like I haven't made any moves in the market today. I'm also slightly handicapped because I don't really have great internet access. I was only really looking at a couple of pieces to potentially even move with. I was looking at this Wayfair short, which if anyone took the Wayfair short, by the way, from what I said, it's doing great. I called that at around 197, and it is fallen another couple of dollars. So if you got in on the weeklies, those 195s are up about 25% from when we talked about them. And if you were looking at the December 31st ones, they're up about a similar amount. So definitely that is the one play that I've been looking at on the short side. Everything else just seems to be in limbo. So I'm not really trying to do too much movement in those areas. Okay, let's bring it back. So I guess while we're kind of just like feeling this out, Stock Talk, we'd love to hear. I know that you just opened that Discord. I wanted to actually give you a minute or two or three to just talk about like what's going on in there. If you had any updates on that, I don't know if it's full or anything or if people are still getting in, but I've been enjoying looking through it this weekend. So just wanted to give you a couple minutes on that.
I appreciate that, Gav. Yeah, like I've been doing this Twitter thing. I mean, I've been on FinTwit for like a long time, but I started this Twitter page last year and just kind of was trying to change the whole narrative of like rocket emojis and like finding the lowest float, most pumpable stocks, or like, and I'm not knocking anyone. I know Juicy talks about the options contracts he buys, but like Juicy knows how to fucking trade. He's not the type of person I'm talking about. Like he can explain to you every single part of his trade. Same thing with Matt when he calls out an options contract. Like they're explaining to you all of their entries, all their exits, all of their rules, their triggers, why they're taking it. Like they can give you a sophisticated thesis, but on other parts of Fintuit, there's people that just tweet options contracts with no context, or they tweet about only about stocks that are movable. And like, I'm not going to name any names, but there's people I've talked to that have a lot of followers who I've discussed genuine ideas with. I'll tell them, look, the stock looks undervalued here. I feel like it's overlooked by the market. And then the first thing they always reply with is, what's the float? Is it movable? Is it this? Is it that? And once I started seeing that stuff, I was like, dude, this is really bad because sure, we can all as a community come together and say it's the investors or the trader's responsibility. And I get that. That's what everybody on Fintuit loves to say. Like it's you're the one pulling the trigger. I agree with that, but it's also like, I feel like we have a responsibility just as like human beings to try to provide ideas that we genuinely think are quality ideas, not because of the pumpability of them. And so, I did my Twitter page for free for a year completely. And my Twitter page obviously will always be free, and I'll always tweet content and news and analysis on my Twitter for free. But like, there are people that I've met along the way. Like, I got a lot of followers in a pretty short period of time. I never promoted my Twitter page. I never advertised it. I never did a paid promotion with any brand. Like people who have followed me for a year know I've never endorsed any brand, any service. I've never done, coupon codes with different products. And so I try to keep it completely free and completely access to people. But I had a lot of people along the way who DM me and wanted more of my time. And whereas I love donating time and I'll continue to donate time on Spaces and on Twitter for as long as I trade, because I do enjoy educating people, I do know that like I also have a life. And so, if people do want my time in the evenings and the weekends and want me to give detailed watch lists, detailed analysis, explanations of my thoughts on the market as the day goes on, that takes a lot of time commitment, and so that's why I started this service. I kept it what I thought was very cheap. A lot of services are charging 100, 200, 300, some 400, $500 a month. And I didn't want to make it like that because in reality, the people who can afford a service like that usually aren't the ones that need help. And so, my goal with this is really to try to educate people. I know that Evan's in the Discord, Wolf, Gav, I know you're in there. I know Gerg is in there. Juicy, I think I recently put you in there as well. I have educational content on there. I have links. I have videos explaining almost every part of trading. I have strategies channel. We're going to start doing seminars in there. The first one's coming first week of January. It'll be by me and Pete Doom. For those who remember Pete Doom, an OG of Twitter. We'll be doing a seminar on how to build a master watch list and how to trade with one. So how to sympathy trade and how to trend trade, which is something I've been doing for years, a strategy I know in very detail. I'm going to be giving examples, categories and everything. So we're providing a lot of value, I think, for something that's priced so cheaply. It's the price of basically a Netflix subscription a month. And we're getting really great feedback so far, so it's going excellently. But again, this isn't something that you have to do. If you're somebody who follows me and you're younger and you can't afford $20 a month, or you don't want that extra access to my time or the time of my team members, then that's absolutely fine. And there's no pressure on you to sign up. But for those who do want more intimate membership, who want more intimate guidance on, on trading strategies and education and more detailed ideas, really, right? Because on Twitter, I only have so many characters. I don't like making a thread every time I tweet. And so, I give a limited amount of information. But on Discord, I put out my watch list yesterday over the weekend, and it's like 6 paragraphs long. And I explained every reason for every category of what I was watching, why I was watching it, what I'm looking for to happen in the market. So it's a place for people who have followed me for a long time, or even if you haven't followed me for a long time, if you want detailed information, I have who I think are some of the best traders on there as contributors as well, who are sharing their ideas. And, I know that there's a big stigma on Fintuit against charging people for anything. But again, my Twitter will always be free. This is just for people that want more of my time because, as no matter how much money you're making, your time's always limited. And so that is the reason I'm charging. But again, I feel like it's really reasonable for the value. And obviously that sounds biased coming from me, but I encourage anyone to go, check it out for a month and, see if it's worth it to you. Because so far from everybody who's joined, we've heard nothing but great things. And Matt's in there as well, providing some awesome content and just like really doing a fire job. So I appreciate Matt for that as well. But yeah, I think it's something that I hope will be useful to a lot of people. So I appreciate you letting me talk about that, Gav.
Yo, let me hop in here real quick, yo. Big shout outs to Stock Talk. I've been in this chat room. You guys know me. I don't really recommend a lot of people. I'll go ahead and throw out that recommendation. His chat room's dope. I've been in it. Honestly, I think he's undercharging. I think he should be charging a lot more. And mind you, this is a double-edged sword, right? He provides, just like myself, I have paid content, but we also provide a lot of free content. But that paid content, that's a lot of time and work that he and I are putting into you as a trader to give you everything you need to succeed. So big shout outs to Stock Talk. I highly recommend it. So you guys can roll over there and check him out.
Appreciate that, Juicy. And check out Juicy's as well, because he's a fire trader, and I don't say that about anybody either. So check his out as well. Appreciate that, man.
We only bring the best up here. That's how it is. Okay, real quick. I did just pin the last pinned one. So I was DMing with Twitter Spaces, and they asked me to apparently get their devs' attention to use the hashtag Spaces Bugs. So I did just tweet that out, and I pinned it up top. And if anybody could retweet that, that would mean a ton to me, because I need to have Spaces without these major bugs, and it's just really fucking with me. So with that being said, thank you to everyone who can share that. I hope to get their attention. I'm going to tweet it probably again at them if it doesn't work. Okay, let's keep the ball moving. So Gerg, what's up with Palantir, man? So we're trying to just continue to hold this $18 range. Are you adding to the position or just chilling?
No, I haven't even looked at Palantir for a week now. So what price is it right now? $18, $19?
It's under 19, yeah.
Oh yeah, okay, yeah. I think this stays above 1750. If it goes under 17, I might short 15 puts. Those will be free money. Other than that, I'm not adding anything, and no exceptions to that name. Even if it's my favorite stock, it goes on 50%, I still wouldn't buy it till January. So I do love Palantir, so, but no plans to add anything to these levels for now.
Okay. Matt, any thoughts on Palantir here? And then also, Matt, Upstart is continuing this wild downtrend.
I think UPST goes to $100.
Gerg really called the top on that one, huh?
Yeah, on the dot. I mean, that guy, right? When you have nobody's going on the CNBC trying to pump a stock, and when you ask them what do they do, what's the company do, and they have no clue, that's when you sell. You should sell first, ask questions later. And if you put that on the chart, that day was the highest it ever went. It hasn't had the 10% plus day since then. And since then, it's down 70% so far. So I think if it goes to $100, I might buy some. Other than that, no position and no plans to buy it.
Matt?
Yeah, I remember when Gab talked about Upstart, that it's been coming down ever since then. That was a great call. Palantir has a 19. Everything on below 19 is resistance. It's a lot of the market structuring this way. So everything is got that. If it fills its gap, that's probably the luckiest you could hope for today. I think a lot of these stocks, and again, when he's asking me these levels, I'm running it through a piece of software. We pull information from a lot of things, but mostly I'm looking at large positions in the underlying by snipping through options data. And so what these levels are in 19 is all it shows is that there's larger short interest than long interest there. So there's a very large bearish resistance, and the other calculations, where the buy and sell programs are, the gamma side of the short side of the options, 19 is just pressure down and all options for like a month out. So Palantir is gonna hit a roadblock for probably the next week, just like everything else is going to. But the thing is we're on the edge, right, of everything else, and the breakout is 21 on that, and a lot of the stocks have that same look. I mean, they're right on the edge, so it's just a moment's notice if anything breaks out. So from now, it doesn't look good today, but maybe sometime middle of the week, end of the week, when everything else starts to probably pull back or start to recover. I mean, Upstart, let me see if I get some numbers to Upstart. It says 147.5. What is Upstart look like? Yeah, Upstart's to just 150, 147.5 resistance all the way down. No support anywhere until 139, and we're losing that right now. So, yep.
I'm inclined to take some shorts today. I mean, MarketWatch just published, Biden's announced next steps as Omicron variant of coronavirus takes hold. I don't know if anybody saw the language. So I always think that the language that is, used in government releases is very important, as that is very carefully worded in order not to usually cause, a mass of public sentiment in one way or the other. But if you look at the White House this morning, from whitehouse.gov, they said, for the unvaccinated, you're looking at a winter of severe illness and death for yourselves, your families, and the hospitals you may soon overwhelm. That was the verbatim wording used. And that does not, to me, indicate that Biden's going to come out tomorrow and say anything besides, like, we're fucked. And I just feel like, the market is not going to rally on that as we go into it. So I definitely want to have, at least a couple of, small hedges in place that could run, a couple 100%, or worst case, the rest of my stocks go up if it does rally. But I just don't feel like we're going to have a flat market this week. I feel like there's going to be volatility, and I want to capitalize on that volatility.
That's a great plan.
Stock talk, thoughts on that?
Sorry, I was trading in the background. I missed your question. I don't want to make you repeat it, but you can if you want.
No, just talking about how, with the verbiage that is being used by the White House going into tomorrow's meeting, there is going to be volatility. Like, it just feels like that.
Yeah. The thing with weeks like this, Gab, is what? It's the same thing with last week, right? Like, we had, when you're coming into a week with scheduled catalysts that the whole market knows about, right? Last week, the entire market knew about the Fed meeting. The entire market knew about quad witching, or at least the better part of the market, the smart money, the big money, most of the money knew about those two events. So you don't want to necessarily think of most of the participants know about an event. You want to think, does most of the liquidity know about an event? That's what matters, right? So coming into the Fed meeting on Wednesday, we had selling Monday, selling Tuesday, selling basically, I mean, not all the way up until Powell spoke, but pretty much even the CPI numbers coming out didn't really change the sentiment that fast. But as soon as Powell suggested that he views the stock market as an indicator of the market's reaction to policy changes, that was basically him saying, look, yeah, we're the Fed. We're going to protect the market. Yeah, we're going to double tapering, but we're not going to touch interest rates until it's done. And when we do touch interest rates, it's going to be partitioned into 3 to 4 partial rate increase that's not going to be too steep, right? So when you say stuff like that, the market's like, all right, we're running out of excuses not to run. You saw how everyone saw on that reversal on Wednesday was one of the biggest reversals all year long. And I think NASDAQ was down about 0.7%, and then NASDAQ finished up 2.3%. That doesn't happen. And it was because there was clearly, a risk on attitude that emerged out of nowhere. But it was obviously too hasty, because anyone with a little bit more knowledge would have known Friday we were coming up on the quad witching. So this is an entirely sentiment-driven market. I mean, granted, quad witching isn't necessarily a sentiment-driven event, because the expiration of all those contracts simultaneously can just dry up liquidity and volume, which is part of the reason you generally see downside action on days like that. But the reality is usually that dip gets bought up pretty quickly. Coming into today, with all this Omicron FUD and the Netherlands shutting down, and the UK considering a shutdown, and Germany considering a shutdown, we have that FUD, but I really do feel like the market's getting blunter and blunter with regards to its reaction to COVID. I think that's why this theme didn't last for the day, right? From pre-market in the open, you would have thought, all right, vaccine stocks are going to rip today and travel stocks are going to dump. That theme lasted for about 45 minutes. Right. I mean, if you don't include pre-market, it lasts for a couple hours. But as soon as the big volume came in and we see the competition on the bid ask go up, people don't really want to carry that narrative anymore. And like I said, the more catalyst comes up, the more blunt it becomes. But going into Biden tomorrow, Biden has the ability to change it on a nail. Right. If he completely shoots down the idea of lockdowns, I think we explode. If he even suggests that it's possible, I think we see more downside action. I really think it's that simple. It's a binary event. And When it's sentiment driven, the headlines matter, right? Like news matters a lot when it's sentiment driven.
Yeah, I like that terminology for it as a binary event. There certainly is going to be that movement as everybody's sitting and watching. And what time is he speaking at?
I need to double check that. I don't know if anyone else here knows that.
I think
Evan might be the guy
tomorrow,
to go
right?
to for that.
It might be tomorrow. It isn't today, I think.
No, it is tomorrow. I'm saying what time tomorrow?
Yeah.
Evan, I feel like he's checking right now.
I am going to check right now.
No, he's buying the dip, guys. He's buying AMD.
No, I'm actually responding.
Evan, you're on the spot, Evan. You're responsible for this. You're the news guy.
That is true. I am the news guy. Honestly, I'm going to take a guess. It's either going to be 11 a.m. Eastern or 1:30 a.m. Eastern, but I'll give you guys in an exact second.
Okay. We'll see what happens. If it's at a time when I'm on Spaces, I'm sure it'll make life interesting. If it's at 11 a.m., I'm sure that'll make life very interesting because I've got a couple of Spaces after that. Okay. All right. Let's run through a couple more pieces here. I hope that this chat has been helpful for people in the audience who are kind of getting a grasp of what's going to be happening this week, how to position yourself accordingly. If you are a day trader, you've heard 3 or 4 successful day traders up here say that they are pretty much staying out of the market today. They're not trying to dive into anything. If you're going to dive in, I recommend tight stop losses. I also recommend position sizing on days like today. So you may see an opportunity, you think something's going to pop, upside, downside, whatever it is, but maybe don't use, the same position sizing as you would to normally. And if you're a long-term investor, maybe there's some good opportunities for you here. If something's coming down and you're like, hey, PLTR at 18, I like that a lot. It's down 5% today. Maybe you go grab that. Maybe it's SoFi, whatever it is, not financial advice or anything. I'm just saying, as examples, Divin here just tweeted this and I thought it was pretty good. Wealth is built on red days. And it's, definitely a good point. So there's opportunity throughout there. And then there's other areas of the market where you can right now, I've been moving way more into staking crypto and just earning consistent rewards. I stake stable coins at 9% APY and that works for me. You can also stake at higher percentages with other stuff.
No. Gav. Move
hey.
to crypto.com, 14% a year on USDC.
Yeah, okay. I don't have 50 grand to lock up for 6 months.
I mean, if you do that, it's worth it. If you look at that.
If you have 50 grand that you don't need for 6 months, you can go and you can put it in crypto.com at 14%. Yeah, there is a lot of really good ones. You can also use Celsius at 12. Maybe I'll do a space just on staking itself at some point for people that are interested in the stable coins. Probably won't talk about the high volatility stuff because I don't want to lead people into too much risk. But with the stable coins, you can really get 9 to 12 or sometimes 14 pretty easily. And I think that's, I definitely think that people should still have stocks and other stuff as a part of their portfolio. It's just about diversification here, which I think, if you were well diversified going into events like this, especially volatile times in the market, it's going to just make your life a little bit easier. For me, I have a third of my net worth staked right now. So it's I know that isn't, changing on a daily basis. I just understand what it's earning every single day. Okay. Let's come back around. So, Juicy, been a second since you spoke. Going into tomorrow's event, how are you playing that?
Cash, man. Somebody said something about wealth. I just want to comment. Wealth's built through consistency, right? Consistent small amounts that consistently comes with built wealth, and that's how I've generated wealth. Not just through trading, but through other business ventures as well. But tomorrow, I'm going to be cashing into the event. I don't think it would be smart for you to try to position yourself. The real thing where everybody's going to be watching for is, and what I'm seeing on Twitter, is are we going to shut down? And me personally, I can only speculate. I don't think we are going to shut down. The virus has been proven to be 1% deadly in a way. 99% of the people do survive who catch it. So for me, I don't think that they're going to shut down off that. I think that on the only thing that Biden's going to do tomorrow is pump vaccinations, saying that you need to go get vaccinated, and on a serious manner. I think that business stays open. And I think that if we're not pushing a shutdown, we might even get a little pop in the market, but we don't know until the news comes out. For me, I honestly think it'd be detrimental to you if you position yourself in any way before the news. So I honestly recommend stay cash, stay out of it. And play defense. For me, I'm ending the year up 1,300%. So I have literally no desire to put any capital at work and risk and give back any of these gains. So the market
Quality over quantity, right?
it will have to beg me. It will legitimately have to beg me to get in this market. So I'm chilling. So cash only for me tomorrow.
The flex. Love it. Okay, Tesla just gave up the $900 level. Thoughts on that, Juicy?
Tesla doing the same thing as look at Amazon. Look, I'm gonna give you some charts. Tesla, Amazon, Apple, QQQ doing the exact same thing. Completely sideways. If you take Tesla, wait for that break of 898. You do have room to 853, but you need the market behind you, man. The market has to dump, and the market's sideways. So I've noticed this too. I was watching some new members in my chat, and I'm on audio all day. Like after the Pfizer, I'm like, yo, put your hands in your pocket. If you're gonna sit behind this computer, put your hands in your pocket. Don't push any buttons. And I got some new people who don't know anything about trading, trying to short this stuff. And every time they short, green candle comes right in and stops them right out. And they go long, red candle comes in and stops them back out. Not the kind of market you want to trade.
Okay. Yeah, that's pretty fair. I certainly don't short Tesla. That's something I will say. I will not be shorting that stock. I have plenty of troubles going long on it as well. That's something where I just hold commons. And I'm not super, for anyone that's holding Tesla, this range of 8 to 900 is pretty murky, I would say. I could definitely see it going through it. I think there is support at the high of the 700s. But I wouldn't really be like trying to trade it too much in between 8 to 900. There's not a whole lot going on there if you're looking at like anchor VWAPs and moving averages and the technicals. Obviously, you have the fundamentals, which is an entirely separate thing. But Tesla's not super based off of fundamentals.
So with Tesla, the one thing I want to say about Tesla is that it's a big mover. So any stock that you have with a big mover, they usually form some type of consolidation, and then they take off, and then they consolidate forever and do the same thing over and over again. If you go back last year in November, you pretty much see the same chart. Last year in November, took off, consolidated, and then took off again. And this is what we're doing. Everybody only remembers that move up, and that baits you back into the trade. Like you just remember making 1,000% on Tesla. So every green candle is like, oh my God, this is it, right? You got to wait on formations and you got to wait on cycles. So for me, I'm stay away from it. Just don't do it.
Hear you, Gerg?
Yeah, I think the only way I buy Tesla is it goes to $200. I might buy some. Otherwise, still no.
Did you say 200?
Yeah, 200 to 250.
Don't make me kick you. No, I'm just kidding.
Like, I wouldn't buy a single EV in this market still. Like Lucid, $20 I might buy it. Rivian, $60, $50. Nikola, I think Nikola seems good at $8, to be honest.
Oh yeah, Nicola's a good buy at $8.
Yeah, but Nikola did deliver the first car, right? And they do have decent cash, but I think they do another offering soon. After that, if it's $700, I might trade it because like the big holders, right? None of them are selling. If you track the institutional ownership, it hasn't moved a bit. People seem to still be bullish. I initially thought it was a fraud, but it seems the cheapest, right? Even Fisker's the cheapest. I was short Fisker for a while. I think I would cover that soon. But I think EVs are still very overvalued. The Tesla 250, 300, I might buy it there. Otherwise, no plans.
Yeah.
But I do like the company. I do like the team, but the stock is still overvalued. So.
Yeah, EV is a little bit of a crazy segment.
In all seriousness, with Tesla, in all seriousness, no. I look back to what happened in the past, like, look back to the last 5-10 years of Tesla, and what you really see is large bull runs followed by long periods of consolidation, followed by long bull runs. We see what just happened here over this last year, this excessive run. That's not going to happen forever. It just can't. It can't go up in a straight line. That's just not how this stuff works. When I look at this, I'm not the short-term expert. But, listen, Apple's a completely different company. It is still growing, and it does have this period of consolidation. And Apple still does have those times where people bet against it. But, with Tesla, I really would not be – I would be surprised if Tesla didn't have a decently long period of consolidation / market underperformance before we really start to see the next bull run. For me as the long-term investor, I really see that future of Tesla at a much higher valuation. But, I think the road to get there might take a couple of years of consolidation I don't think we ever get back to 250 in all seriousness. But I do think we have some consolidation. Maybe it's around this period, levels. Maybe it's 20% higher. Maybe it's 20% lower. I don't know where that is, but I think we have a little bit of time before we see the next bull market. I think there's definitely
Yeah,
some
I agree with
consolidation
you,
needed.
right? Even in March, April, May, when Tesla was 650, I thought Tesla was done for. But since then, it's up 1,000%, so 100% my bad. So, like Tesla is something I would never go short. Like when you think it's done, it goes up another 100%. So it's almost impossible to find a fair valuation for this. But I wouldn't want to be long here. But I do understand the thesis of some people and why they're so bullish on the stock and the future of the company.
Okay, one other area that I want to run into. So stock talk. There's been a ton of volatility in SPACs. And we've seen giant moves in like GNI, IonQ had just up and down, up and down. PL been a little bit all over the place. What's been your strategy with SPACs lately?
The thing with me with D-SPACs is I generally don't hold them unless they are plays that I'm willing to put in my long-term account and keep for a while. And recently I've been, I tweeted about this the other week about just scaling in too quickly into some of my high conviction positions. Like on my trading account, I manage it very differently. I'm prioritizing cash. I'm in and out. So I'm not getting caught by these moves where these things dump 20, 30%. But on my long-term account, sometimes I do get caught by those steep downside moves because I don't use stops on my long-term account, right? It's an investing account. So I manage it very differently. And so, these SPACs have been tough. 90% of them are below $10 now, right? It's just a different risk climate. We have policy headwinds coming up, eventual interest rate increases, just general broad market weakness in small and mid caps. And so a lot of them are getting caught up in that. It's like the term I always use is like, babies getting thrown out with the bathwater. It's really what it is. And, SPAC sentiment tends to cycle as an asset class, not really according to like which company does what or which one's undervalued or overvalued. They don't trade like that. They just trade in unison. I mean, on most days when most SPACs are down, they're down together. On most days when most SPACs are up, they're up together. It's just the way the asset class trades. And then you always have a few outliers. Like today, you have ROIV running off the vaccine sympathy, and then you have DWAC popping a bit now, which I have on watch, but we'll see what happens there. But yeah, I mean, other than that, it's pretty sparse activity. So, I'm not being over aggressively adding anything here, especially in my long-term account. I'm trying to just be more of a day trader in this climate and, at most maybe hold a couple things overnight. But like on my trading account, I'm trying to be very nimble in and out. I just don't trust, the follow through in this kind of market. Breakouts are not following through, trends are reversing on a dime. And so when I don't trust the tape, I don't want to be adding aggressively to anything. And so I don't do that in this kind of climate. When the market's either dumping definitively or rallying definitively, then you can put on size and extend your leash a little bit because you're confident in the trend. But when the market's choppy, you can't do that because you could go super long. Like think about it, people that went super long the vaccine travel trade, let's say this morning, they would have gotten slaughtered in minutes. And so you have to like kind of temper your attitude towards that and realize like, look, this is an environment for quick gains. You take them when you see them or you give them up, like people who have been aggressively adding the dip for weeks now have gotten slaughtered, right? So I try not to put on too much size on D-SPACs or any names really in a market like this, especially on my long-term account. Like I've gone from, I normally swing trade, but the last few months in this market, I've been purely a day trader on my trading account. Like not purely, but mostly a day trader. And so I'm in and out. And if I see like a bounce off a key support, I'm not getting greedy to wait for it to reclaim another two supports. I'm going to just, get out before the next resistance point and just, take the meat of the move. I'm happy if I'm playing equities with size in this kind of market on a day trade. If I'm playing just shares with size, I'm happy with 10, 12%. If I'm playing options, I'm happy with 20, 30, 40%, more than happy, So I'm taking those base hits and just protecting capital. I'm not trying to play a predictor's game in this kind of market.
I definitely hear that. Yeah, I think that's been the
reiterated point of we just don't have an idea of the direction that we're going in, and that makes it extremely difficult to lay any big money on the table. So yeah, continuing to keep keep watching the sidelines. I'm just seeing more things move to red today. Crypto as well is falling kind of with the market, proving, I guess, that maybe it's not the inflationary hedge, but we'll see. Evan, so we've been running for almost 2 hours now. Oh, one more time for anybody that wants to be on the Google Calendar so you can see when all of our spaces are happening and join the 1,600 other people on it. Make sure that your email is included in your DM. I see several people DM'd me. Just make sure your email, preferably a Gmail, is in there. And if you haven't already shot that over to me, hop in the DMs now. Just shoot that over, and we will get you onto the calendar ASAP. Again, it is just shooting over your Gmail. And also, a lot of people have been in the DMs saying some really nice stuff today. So thank you to the crowd who's been great, wishing us happy holidays, appreciating the education. I appreciate it too. It's awesome to have these amazing people up here that are real educators and have come through for us in a big way for the past several months and hopefully for a long time coming. Again, if anybody's able to, I pinned it up top. It's a second to last tweet pinned. That we've been having a lot of technical problems with spaces today. I tagged them with hashtag spaces bugs. If you want to comment hashtag spaces bugs on that, if you don't want to retweet, that would be helpful. Any way to just tag them. We need them to open a ticket and get their devs on this. Again, they don't have a very large team working on spaces. They have doubled in size over the last few months, but still, I mean, the entire Twitter staff is smaller than the team that works on the Oculus. So if you narrow down to just the Twitter staff working on spaces, it's again, they're pretty stretched. They probably need some new devs. If you have dev skills, please do apply and help us out. With that being said, Evan, is there anything else that you wanted to go through today and cover, or should we move into some wrap up?
I got nothing specific right now. I mean, I'm down to chill here and go longer for whatever we need to. Also down for wrap ups. Really kind of down for whatever.
Yeah, I mean, I'm just seeing downturns in the market. We could spend another 5 minutes or so. We can chart some stocks, something along those lines. Also, just a reminder to everybody, I do have another space later today. Hopefully, everything will be working. Evan, I'll need you to pop in to fill the awkward silences if need be. So that'll be at 6:30 p.m. EST with Juicy Stock Talk. I threw you on there as a co-host if you're free then, as well as Dan.
Is that you said today?
Yeah, today.
At what time?
6:30 p.m. EST.
Yeah, I should be good for that. I mean, I'm going to be heading to New Orleans tonight around 7:30 p.m. But yeah, I mean, I should be good for that.
Yeah, that's going to be an option education space. So just like we're going to walk through, and Gerg, you should probably pop on that too. Sorry, I totally forgot. That's going to be like walking through reading Greeks, IV.
Oh, what time?
It's going to be at 6:30 p.m. EST today.
I will try to be there.
Yeah, that's going to be just like full on option education, just like how to find the setups, then how to pick the right strike, the date, everything along those lines. So if you're not already following the Wolf account, as long as you're following it, you will see when that space pops up. We are going to put out a reminder link as well. So again, make sure you're following that Wolf account. Let's get that to 40K today if possible. Going through a few more of these setups. So Evan, let's go through a couple of your favorites. So Matt, I'll drop these to you if you want to do them. So let's do Disney, Square or Block, which has just been way falling, and Apple.
Give me Airbnb as well. Throw Airbnb on that one.
Disney, Square, Airbnb, and one more, Apple. Yeah. All right. Let me see. Disney is 150 resistance, 147.5 resistance. I mean, I can almost bet, I'm going to run through these real quick, that almost all these, despite which sector or what we're looking at, almost everything looks exactly the same today. The market is substantially on the bear side of positions. People were selling and shorting into last week on all these things, and it's reflecting today across the board. Square short below 160, no bull side until 240. Is that right? Hold on, wait. No, I'm sorry. Oh, I typed that wrong. Square 170 resistance, 175 is breakout. So that's a sell. Disney, same boat. Yeah, they all have a similar look. The market, everything gapped down, and nothing has any bull support to break through its gap. Everything's got resistance. Airbnb, let me type that guy in here. Got 157.5. Airbnb resistance there. Yeah, so right at the gap, and it's once it filled its gap, it's resisting. So nothing's really standing out. Apple, I looked at that this morning. Apple's the same. So these levels I'm talking about these are key levels of large volume that will appear due to hedging. So it's going to take a lot of power to break through any of these levels that I'm saying, just because and the volatility is the inverse of liquidity. When you're volatile, buyers and sellers can't find each other. So price has to swing very wildly for transactions to take place. So these large volatile swings we're having are coming from the fact that it's the end of the year and people are liquidating. But both sides, not just the longs are liquidating, shorts are liquidating as well. There's just not a lot of power to come through and break the structure. So the market actually opened on the bear side, and all these stocks, let's see, Apple as well, open on the bear side. And when I say the bear side, is that the positions that we look at, it's stronger on the short side in these levels. And Apple is the same thing, 158, 170, resistance 160. There's a little bit of support at 160 on Apple, but anything below 160 is again bearish. Everything has this look today, and it's interesting to see. And Juicy kind of nailed it. Like everything he said is on point. I mean, if you guys have followed Juicy, I mean he knows this stuff. And Biden, I can only speculate as well. And we're not going to be shutting down anything. He's going to be pumping vaccines, and that's their strategy. And a lot of the words they're using, and Gabby said this is, usually they're very scripted, and that can be further from the truth. Everything that Powell says, everything that Janet Yellen says, everything is so scripted to the point that you can almost verbatim predict what they're going to say a week before they say it. You know what they're supposed to say. You know what they want to achieve, so you can put two and two together and almost write their script for them. There's no way at all. Biden's whole goal is to protect the country's economic recovery. I mean, his whole talking points are about that. And so in no way would a shutdown instill any kind of hope into that whatsoever. So I think that the shutdown is like a 0% chance of happening in my speculation, but it's just going to be a huge vaccine pump. And so it makes me wonder, though, with everything being very distinctly bearish today, that there's something else that's not just COVID related, short-term binary event, black swan kind of things going on, that there is some real liquidation going. And maybe it's just because people have made massive runs over the last year and they're just locking in some of it just because of the possible uncertainty. And better safe than sorry. I mean, you're so far up. Some of these stocks and these ETFs have just made the best run in anybody's career for the last year. So it just might just be profiting. There's just enough selling for people to just lock it in. And I think no matter what tickers I put in, every single one of them has the same setup. It's interesting. So the entire market is structured in a liquidation mode right now. So this is legitimate selling. That this is not just a one-off thing. So I'm kind of speculating further beyond COVID that this is just probably massive locking in of profits. And I think that this selling will likely continue even probably further beyond the speech tomorrow, maybe through middle end of the week. Last night in futures, when you see S&P and NASDAQ futures move as far as they do, it's very, very uncommon for them to move that far and gap down and continue to sell off. And that's usually the start of a multi-day, maybe a multi-week thing. So I'm starting to kind of back off on my thesis that we rally to the end of the year. But anything's possible, and we'll see after this Wednesday and we get that rollover on VIX and VIX futures. We'll see if anything changes on that. But volatility is leading the pack, and it's not coming down. So bigger things going on.
Oh, yeah. And one thing we should definitely mention for anybody that is trading options on the weeklies, the stock market, I thought it was open till 1 p.m. on Friday, but it looks like it's closed. Or certainly at least the option chains are not open till then. So options are going to expire for the week on the 23rd, which is Thursday. So just have a note that Theta is going to eat a little bit harder into what people are doing. I also finally just bit the bullet and I got into the Wayfair short. So Matt, you can tell me whether it's a good idea or not, but I got in on the 195 weekly puts.
Well, not investment advice, but let's talk about how I would pursue Wayfair. Wayfair has been something that has been you and I just kind of talk about Wayfair all the time. It's been a fantastic short. I mean, I think we were talking about Wayfair back when it was maybe 240, 260, and it still just has that same look to it. It's finally starting to dig out some support around the 200s, 205, 220 levels. So it is in a consolidating range right now. But if as long as it actually, no, 200. 200 is still resistance. So yeah, Wayfair looks good below 200. I am looking at so 205 breakout. It's actually really tight. It's on the edge, like everything else. So yeah, Wayfair is still looking pretty bad. On the downside of let me run this really quick. Let's see. Hold on. Let's take my.
And just since I just shorted, it's probably now when it will go up.
So see 200. I'm trying to run, so my internet's blipping for a second. Yeah, what? I don't have any long-term support. So some quarterlies. Some monthlies, quarter plus out 150, and that's about it. So yeah, 200 to 150. Yeah, it's very possible.
I see Peter Tuffman just dropped in. Nick, if you want to get Peter up here, I think we'll do some macro with Peter, and that will be kind of like our final segment. But yeah, of course, this is now. I was up a few percent, so it's just moving. But what I have learned with these options for anyone that's purchasing them is like, don't get too anal about staring about it. I think Wayfair stock here is pretty rough. It's been going down for a bit. It's in a severe downtrend. I don't think we're going to have a bullish day tomorrow. So yes, maybe it's slightly reversing here and I'm down a few percent, but I'm just going to try to let it sit for like an hour or so. Obviously, I'll touch in on it. If it's really going the other way, then I can always cut the loss, but don't get too crazy about these things. But is Peter up here?
What's up, guys?
Hey, Peter, how's it going?
I'm hanging tough here. I'm on the West Side Highway trying to get down to work. I had to miss the opening for a doctor, but I guess everyone's sort of licking their wounds a little bit here. This is a little nice little interesting sell-off here. I'm kind of curious is this all about Omicron, oh my God, virus or what? I think you're going to start seeing once you have a cataclysmic event, which I would say this is starting to become. Fortunately, it's not going to kill people, but I think it's clearly going to throw a wrench in everybody's sauce. I think it's sort of forcing everyone to reevaluate their year-end positioning, right? I think that's what we're seeing here. Now, look, it's only, as I always say, one day does not make a market. If I lose you, I'm on the highway, so I apologize. But for now, we're trading right on the lows on the SPY. Obviously the fear of the virus and it dislocating plans and potentially, causing some complete disruptions in year end are a problem. But I think we're seeing, what we started to see last week was, mutual funds kind of liquidating. I think a lot of these people are feeling the pain of a lot of these stocks on their 52-week lows. I think they are posturing themselves for some redemptions on some of the hedge funds. I think you're getting some mutual funds, selling their tax loss guys and some of their higher flyers to retain any profitability for the year. And they're kind of getting into cash because you never know. People kind of get this fear sentiment in their hearts and people start redeeming, hedge fund positions at year end. And I think they don't want to get caught cash poor on this situation. As we've talked about it before over the last couple of weeks, one of the reasons that we saw the sell-off into, can you hear me?
Yep, we can hear you.
You hear me good? All right.
Yeah, you're
Can everyone
clear.
hear me there? I can't hear him.
What we saw into the end of November was, a number of hedge funds that were profitable coming into the end of November, decided, and this is something we see year over year, that there are a number of funds that find themselves at the end of November in a profitable situation. And they say, you know what, let's close these positions out. Why would I want to turn a winning year into a losing year, especially with all the moving parts we've seen over the last month or so, with some of the high flyers getting hit, some of the big misses, even though earning beat, but stock misses as far as price action goes. And obviously a lot of the other moving parts in the market and the supply chain and inflation and Fed meetings and la. I think we're seeing a little mixture of digesting the reality of a 3 interest rate raises in 2022, the effect of the taper, Omicron virus, interruption of the Santa Claus rally, and positioning of funds. I think that's where we're at, guys.
Awesome. So, Peter, real quick, we've been talking about this Biden speech tomorrow and kind of how it's a little bit of a binary event. If they mention lockdowns, it goes real bad. If they just pump vaccines, perhaps not so bad. Do you have any thoughts on it?
You know what? I do not think. I mean, from what reading, what listening I'm doing to people who I consider bright, I don't think we're looking at a lockdown. But to be honest, guys, a week ago we were not in this situation, right? I was driving around the streets of New York yesterday, and there was a line. Not only are the lines at City MD around the block, but the lines to go to the Museum of Natural History were around the block. So you opened up on November 7th. We opened up travel to 33 countries to the United States, thinking that we've got a little nice window here, that the Christmas holiday was going to be a time to travel, people getting on planes and cruises again. And what we've seen, the numbers that are happening is every day and a half, apparently the numbers out of Europe are that this virus is doubling in its transmissibility every day and a half. So this story is evolving super, super quick. So right now, I don't think we're going to look at a lockdown, because I think a lockdown would be relative to people actually dying, although hospitalizations are spiking. But you know what, to be perfectly honest, I've been on the phone this morning with Brussels and with Holland, where I do some business, and those guys are in complete lockdown. Actually, the country of Holland is now only essential businesses open. We have not seen this kind of stuff since March 2020. So, I think the pressure on Biden is to not do a lockdown, and I'm surely hoping that he doesn't. But you know what? Anything can happen. This story is evolving moment by moment.
Sorry, Peter. Gav is having some technical difficulties. We're trying to get him back up here as a speaker. Ooh, he says he can now speak.
What else? What else? Talk to me, baby. What else was the topic of conversation before I hopped on?
If anyone else wants to go, they can. It's mostly just the volatility in the market today. Today is a down day, but it's a lot about the volatility and how the uncertainty, and we don't really know which direction the market wants to choose right now. The choppiness is the word of the week.
You know what, guys? I think the bigger picture is the fact that we are in the last 2 weeks of December, right? People do close out positions. People do sell their tax loss stocks that have gotten really badly hurt. And I also think that, the flight that many stocks have taken over the last year is going to make the downside momentum be pretty severe. Guys who have profits in stocks are not really, back in the old days when you were liquidating a position of 1 million shares of XYZ, you would work it over a week's period of time and you'd get a really good price for your customer. Those days are over. You've got algos reacting to the news. You've got a lot of negative sentiment out there, which is affecting the market momentum on the downside. And when someone has a stock that they want to get out of, they don't really, price is not the biggest factor right now. They want out. And they're hitting buttons. And, we can look at the way DocuSign reacted to a slight miss on earnings last week. That was the flavor of the moment during COVID. How unheard of it is it to see a stock, a $270 stock, down 100 plus points? That's unheard of. That's basically people hitting buttons trying to preserve any kind of profit they have. So, as I always say, this is not your grandfather's stock market. The volatility, when a stock goes up, first of all, look, some of these other names, when stocks go up for no reason, they may go down for no reason even faster, so that's, I think, why we're seeing the escalation of what's going on.
I'm back up. Okay. Yeah, I think that definitely makes sense. We've been running for about 2 hours, so we're going to wrap up soon. Is there anything else from the macro picture that you think is important for retail investors to be aware of?
You talking to me?
Yes, sir.
I think that we really need to look at the bigger picture. Look, if we look over historic time, these sell-offs this has been going on for a bit of over a week now. The story is getting a little worse. Has the virus been the biggest dislocator of a bull rally over the last year? Not really, even though we've seen spikes. The sell-off has been, there's never been a big follow-through. So I think what you're seeing contribute to this thing, besides the fact that this story is escalating and unfolding and evolving so quickly, is the end of the year story, right? Guys are selling their high flyers for to retain whatever profits they can, close out positions. Mutual funds are getting out of some of their larger cap stuff to get into cash in case of redemptions. And the tax loss stocks, the stocks that got beaten up, are getting beaten up even more because people are selling them for tax loss. And the bottom line is the smart guys are saying, you know what, guys, I would rather than buy into a falling knife here. Why don't we let everybody shake out their anxiety? Let's let this story evolve for another day. I would rather hop on the reversal rally when things start to settle down and on its way back up when the train is leaving the station, rather than try to be the first guy, who's trying to catch a train that's out of control with no brakes coming into the station. I think those are the moving parts in this sort of a perfect storm that we're calling Monday, Monday, the December, whatever day it is.
Yeah, totally understand. Cool. Awesome. I think that definitely touches on it. We've covered a lot of different stocks here, individual positions. I think some people are looking for Apple to perhaps rally here, for anyone that's watching that, looking for a potential reversal. But yeah, I mean, we'll see what happens, but we're definitely going to move into some wrap up here as we've been going for a little bit over 2 hours. So Peter, I'll actually come to you to first, is there anything else that you're doing this week? Anything that people should be aware of? I know that you've done some seminars in the past and some other stuff to help people with this environment. For anyone who's unfamiliar, you should all be following Peter. I don't know why he's not verified on here. He's verified on Instagram. He is Peter is like the life of the New York Stock Exchange. I think that it basically sums it up.
You know what, Gab, I appreciate you and I appreciate this team. And, ever since I met you and found the sort of the strength and ingenuity and brightness of people of your generation being involved in this market, I've sort of reached out to a number of other young people who are in the space. I had a guy on the floor last week whose name is Mr. 4 to 8, and I had another guy who's called the real Sam Jacobs. And these are two people around your age group. One is 20, one's 24, who have really taken on the market in with gangbusters, and now are sort of humble, young, crazy, bright people who are really doing their homework, really learning the market, learning about technical analysis, learning how to trade. And so you opened my eyes to this thing, Gav, and I really thank you for that. And I think there is a new generation in this market that is going to be the next generation of investors in this incredible thing we call the New York Stock Exchange, at least for me, or the markets in general. So I'm super excited about that. What I've been doing is I've been sort of reaching out to people and saying, look, the last 10 days of volatility since that Friday after Thanksgiving have been extraordinary. And we've got a lot of moving parts coming into the end of the year. And if all this volatility isn't a testament to, letting your investments ride, not looking at them on these down days, and really using the volatility as a gift, as long as you know technical analysis. Guys, this is a testament to absolutely, if you have a chance to learn, whether you learn it from me and David Green at Wall Street Global Trading Academy, or you learn it from anybody, and you get somebody who's going to mentor you and hold your hand to learn technical analysis and learn risk management, learn how to never turn a winning trade into a losing trade, taking advantage of this volatility. I mean, there's no other time that this is sort of a punch in the face, and a smack in the back. And it's like, hey, guys, what an amazing opportunity. This volatility is a gift, right? It's not a time to freak. It's a gift if you know technical analysis. So a shout out to that. And if anyone wants to reach out to me, we're having a lot of fun. I'm doing some fun new videos, just telling people to DM me the word risk or money or whatever. If you want to connect with me and talk about technical analysis, we'll put you in the family, and we'll hold your hand and we'll coach you if you need to. And it's all good.
Awesome stuff. Appreciate you, Peter, and everything that you were doing and all the kind words. Make sure you're following Peter, everybody. All right, let's continue with the wrap-up. Stock Talk Weekly. We'd love to hear any closing thoughts from yourself.
Yeah, man, I think I kind of gave a recap on just my general thoughts earlier as well. But, this is just a sentiment-driven market, and I'm going to continue to trade it that way. Again, my trading account is very fluid, very cash-heavy constantly, looking for themes, looking for trends, in and out quickly, not getting greedy with my profits. They call it chop for that reason, because it's difficult to predict the trend and it's difficult to have follow through. And so, in climates like that, it makes more sense to protect your capital, to trade the trend, manage risk, be nimble, because, in a market where we have a decisive trend, like I said, you have a longer leash and you can let your trades run and you can let your winners win. But in a market like this, everything can change on a dime. Like we saw this morning, all the way through pre-market through the open, it was, long vax, short travel. That theme changed very quickly. And now we're just seeing a broader market sell off in general. So, it's just it's not something that you can predict. You could be the best technical analyst in the world and you could sit down and look at the indexes all day, and I don't know a single technical analyst that can tell me where the indexes will be in a month from now. And if they did, then they would just be a best guess, right? And so, I don't think this is a market to hunt setups. I don't think it's a market unless you're hunting downside setups in some of these weaker sectors. But I don't think in general it's a sector to hunt setups, and I don't think it's a market to hunt value either, because you can there's a lot of names, after the sell-off we've seen over the last few months. There's a lot of names that are quote unquote looking like deeper value by the day, but going and trying to capture those as great entries can backfire on you very quickly, because this isn't a market that's prioritizing value versus growth or anything like that. It's just a market that's very sentiment driven, and certain sectors are getting favored because they're in the headlines and they're in the news. And so this is a very catalyst driven market, and I'm going to continue to trade it that way until I see a reason to not think that way. And who knows? Maybe the indices coming into the new year will have a few months where they rip, but maybe the chop will continue all the way through the cycle of tapering. Historically speaking, the market does not respond well to tapering events. It's actually, if you look at the historical data, the reaction to tapering events, and I've talked about this before, is actually more steep than the reaction to interest rates. So keeping all of that in mind, I just think people need to be aware of policy. They need to be aware of the impact of policy on stocks. And I think they also need to be aware of the fact that this is not a market that is going to go in a definitive direction until all of the FUD around Omicron and the Build Back Better plan and inflation and, all of these headline risks that we have right now are dictating the market. And so I think I think this is the kind of market where you have to be aware of the news. You have to be aware of the themes. You have to be aware of the broader picture, because if you're just focused in on the charts or just focused in on the balance sheets or the earnings calls in this kind of market, you're going to get slaughtered. Because like we've seen today, like we saw last week on the Fed on Wednesday, when we had that massive reversal in the indexes, when things like that are happening and you're trying to play it, by pigeonholing yourself either as a technical trader or a fundamental trader, I don't think you'll survive in this market doing that. I think you have to be a momentum trader, a theme trader, a trend trader. You have to be nimble. You have to be looking at volume trends, both inflows and outflows of volume from different sectors. I mean, you have to be consuming a lot more data to trade efficiently in a market like this, and that's really what it comes down to. You have to consume more data than you're used to. In a market where you have a definitive trend, up or down, the amount of information you're getting, I don't want to say it's not important, but it's less important, because you can just rely on the trend to carry it. In this market, you can't. The information you're getting, the headlines you're getting, the sentiment is what's moving or not moving everything. And so, I think everybody needs to be more aware of that in a climate like this, especially newer traders who, many newer traders or even younger traders, who are 18, 19, 20, don't know about the impact of Federal Reserve policy or macroeconomics in general, or inflation even in general, on the time value of money and the availability of liquidity in the markets, and what stocks benefit from raising interest rates versus the stocks that are more likely to have earlier sell-offs, like tech and growth. And so these are the kind of things I think that newer traders and even some experienced traders who haven't done that before, need to be doing the work on right now, is just being aware of how all of these headline risks are going to impact the market and how the market's going to interpret them. So I think that's where everybody's focus needs to be right now, not necessarily on trying to make, and I'm not knocking any of the technical analysts that I follow on Twitter. Most of them are great, especially the ones that I follow, even though I think that's biased. But, as good of a technical analyst as you are, drawing charts and painting scenarios, bull cases, bear cases, is really a fool's errand at this juncture, because the sentiment is going to drive the market. If If we wake up, January 1st, 2022, and the market decides, all right, we've had our temper tantrum over tapers. We've had our taper tantrum, as they call it. We know interest rates are going to be raised in parcels, and we're okay with it. And, it's baked in, and let's go. Let's rock. The stock market's still the best place to put your money. I don't know if that'll happen, but that could happen, right? So, I don't think that we're locked into this chop. I think that can change with, a change in sentiment, but I'm paying attention to headlines more than anything. I'm a news-based day trader right now. If you had to classify me on my trading account, I'm just a news-based day trader. And, on my long-term account, it's been hurting, on some of these days, but I've been through that with my long-term account before. And so I try not to panic too much with long-term positions.
Great points all around. I think my biggest takeaway is what you said there, with you just have to take in more information now than ever. So whether that is reading the Wall Street Journal and staying up to date on, current news, or making your way into spaces or discords or anything like that, you just can't be trading blind. And there's a lot of different programs. Sorry if there's noise in the background. They just started doing like construction right next to me on the beach, and there's like planes flying overhead, and there's like kids Naruto running next to me. So there's just a lot going on. But yeah, I completely agree with you with the need to be taking in more information. Okay, Matt, would love to come to you for some wrap up.
Yeah, I gave most of my wrap up kind of thoughts earlier too, and Stock Talk, I mean, nailed it. And of course, Peter, what everyone's saying is absolutely correct. It is a day trader's market. When volatility spontaneously erupts, there's not a lot of easy finds. And I personally don't like to take markets that spontaneously break out like this and go in and look for shorts. They're harder to manage. Higher volatility means markets have larger swings. You get in at the wrong spot, you're upside down a couple of percent, 10% before you're right side up. Volatility is not the most fun thing to day trade. And as a day trader, I love to sit out and it's kind of it's a good empowering feeling to know that you did your right homework. The market's going to be a certain way. And all these traders here that are talking, everyone that's listening, everyone's so on point with their game. They understand, like, you wake up in the morning and they know this is not a dip that's just like any other dip. Everybody that does their homework here knows the difference between this kind of market and the other market that sells off for a day or two. Things are somewhat changing at the end of the year, and you could tell when almost everybody universally is saying that has spoken, I'm sitting out, I'm waiting for this. This is decades and years and decades of experience and wisdom of people that know what they're doing. As a day trader, every day, I mean, I make a living scalping 10 points on the ES. I don't need it to rocket 4% or 3% or 90 points overnight to give me some money. I love to, when it falls, to know better and to sit out and to know to sit out. And the first thing I said last night when the trigger hit, or early this morning, was, hey guys, I'm going to sit out and take the day off. I normally have a live stream. I might even turn it on because I try to live by example. If I'm sitting out, I don't want to appear as if I'm trying to look for something to do. I want everybody to know, like, I'm taking that stance, because it's a really powerful thing when you know what you're doing, to know when risk is not in your favor. If you're trying to squeeze out a couple of points on a long to ride out to the end of the year, as Peter said earlier, it's a combination of factors, not just the COVID stuff that's really pulling the market down. I mean, COVID's been a thing for 2 years, since, or actually longer, but it's been in the narrative for 2 years as far as Wall Street's concerned, and it had its effect on the stock market only because businesses were shutting down, and people, the smartest heads in the room, they knew that would cause a logistical nightmare for like 5 to 10 years. I mean, it wasn't just like, oh, we're going to lose revenue for a couple of months. People understood the longer term effects, and the smartest people out there knew that if you shut all the businesses down, it would be so insanely hard to recover from it. And we always talk about like a car wreck. Once the wreck clears, that slow spot is still in the freeway for hours to come. And it's a principle in physics we call a standing wave, and that happens. And in COVID, the logistical problems we've been dealing with, that it's always been here. So just because COVID like resurfaces in the narrative towards the end of the year, as far as Biden pumping vaccines, which is exactly what he's doing, I think they're not going to have any shutdowns. It's really, you can't just think that, okay, after the meeting things might clear up and be better. You can, if you know what these people are saying here, or what everybody's talking about, this is unusual volatility, which just comes from unusual selling. And as Peter said, markets can go up for no reason at all. They can come down for no reason at all, twice as fast. And that's really kind of what we're seeing. People are selling for a multitude of reasons, not just COVID. So I don't think, like, after Biden speaks, there may be some volatility. Again, volatility is the key word, but no direction. It's choppy. It's dangerous. It's flat. Day traders, I know it's depending on what kind of day trader you are. A lot of people say they love volatility and they love when the market rallies. They love when something moves 50, 100%, 500%. As a day trader who tries to day trade, like for a living, volatility depends on what you trade. Volatility is my enemy. I don't like it. I like smooth bull markets with low drawdowns and easy managed positions, and that's my bread and butter. And when the market's volatile, I just feel great sitting out and knowing better. And anyone else that's in a long or a short and suffering right now because they didn't know better, the win is I'm not in a loss. So keep in mind that every day is a trading day if you guys are learning how to trade. And don't always try to force something. When the market is unusually volatile, unusual means unpredictable. As Stock Talk said, nobody's charts are going to make any sense now. Everybody's numbers today are going to be different tomorrow. The structure falls apart when volatility comes. It's exactly what volatility is. There's no structure, there's no agreements, and things will change from day to day. So be very careful. If you are doing anything, you use your stop losses, but just know that most people here are choosing to sit out or be cash for a reason.
Yeah, Stock Talk.
Oh, sorry. Yeah, I just wanted to piggyback on what Matt was saying. Like, what puzzles me is just like, what is the broader expectation here? Like, really think about it logically. Does anyone really think the United States will like the most capitalist economy of all time will shut down again a year after what happened in 2022? And I understand, some people may make the political argument that the Democrats want that to happen or whatever it may be. I mean, I'm not even making a political statement here. What I'm just saying is like, realistically, can the global economy take the risk reward of doing that again? I think the answer is clearly no. The central banks have run out of tape, right? So we're not in a position globally, especially considering the supply chain shortages we're having, all of these things that are quote unquote going wrong in the economy that are preventing us from gapping up in GDP growth. Will the world really shut down again over a variant that has significantly lower hospitalizations than the previous ones? I don't believe that. And regardless of what the reaction we're seeing in the market now, like, I just find that narrative hard to buy. And I think maybe at a certain juncture the market will as well. I don't know if they will today or tomorrow, but I think at a certain point the market kind of digests this and realizes, like, look, maybe COVID doesn't go away. And we have to find a way to keep the global economy open while also, doing what we can to curb its spread. But I really think that that's the point we're headed to, just kind of in a consensus from the market. But, I don't know how long it's going to take to get there.
Very fair. Thank you, Matt and Stock Talk. Gavin?
Yeah, what's your question?
Just any closing thoughts?
The closing thoughts, just like I said, no plan to read anything till January. So historically, right, last 5 years, January is usually up 2% for SPY. Feb, SPY is down 1%. March, SPY is down almost 2%. April has been green for last 7 years back to back, up 3% on average. Then you have May. May is up 60 basis points. Then June is pretty good. July is pretty good. June, July, August are historically up 2% plus every month. So April and August is a pretty good time to be long, especially on these large caps. And September is usually a bit choppy. October too is red, and November is usually green too. But I'm waiting till January. I will start buying some, but I will start buying aggressively in March or April and try to dump them before September of the next year. So I'm playing the long game here.
Okay. I always appreciate the historicals. There definitely is plenty of weight that is held there. Okay, and stock market news. And everybody, in a market like this, you need to be following stock market news. My co-host, you really, like we just talked about it with Stock Talk Weekly, about how you need information more now than ever. And the best place to get your information is stock market news. Just such a verifiable source. Brings it to you basically the quickest that you're going to get it without having to pay for a service. So if you're not already following and you're like, hey, I actually want to know what's going on with my stocks. I want to know when buy ratings are changed or when massive news breaks. Follow stock market news. And if you're up for it, throw on his notifications.
The notifications is a lot. I appreciate that, dude. It's important to get that stuff, but you'll see all my spelling mistakes in there as well. Shout out to Twitter for not having an edit button. But I really appreciate that. I'm trying to do this as consistently. Wow, that took a little bit to get out there. I've been doing this for almost 2 years now. We're getting to that point, which is kind of crazy. We're still a couple months away from that, but yeah. So big shout out to that. Big shout out to the Wolf Financial account that's up here. They're closing in on 40K. Where are they at right now? 39.8K. Wow. So honestly, they could be hitting it today or tomorrow. You definitely got to be checking them out. They're doing spaces all the time. And we've talked a little bit about the Google Calendar, and maybe we'll get one more shout out to it in a second. But another great way to always see the spaces is to make sure you're following that account. Make sure you're following all the other speakers we have up here. Stock Talk Weekly is a great follow. Gergavin, Matt. I know we've had Juicy and Ben, who actually had to drop off a little bit earlier, who had to drop off. They're regulars on the spaces, so just next time you see them on here, make sure you do give them a follow. They're all really, really quality accounts. They come up here and give great information. Their Twitter accounts are even better. One more big shout out to the Green Raccoon Bullish Rippers, the account that's up here. I do personally tweet from that account. Make sure you do give that account a follow. I've been grinding on it, getting some good memes out. So I definitely do think it's worth the follow and definitely worth the check out at least. Really appreciate all the speakers for coming up here. Really appreciate everyone for coming in and listening and hopefully getting some value out of this. These things are really worth it because of all the great messages that we get back of how much you guys are taking out of this. So I love doing these spaces. I love the Good Morning FinTwit space. I'm just excited to continue with it. And next week, hopefully we can do it again. But I'll throw it back to Gav with that.
Thank you, sir. And yeah, I'm still waiting for Twitter Spaces. I submitted this space to be tweeted out by them, so hopefully they keep their word at some point. I know their staff's been pretty overloaded, and obviously I'm going to be breathing down their necks today to get this technical stuff fixed. But real quick, we mentioned the Google Calendar a couple of times. Once again, it is the best tool for finding amazing spaces on Twitter. You must all be very busy people. That is my assumption. You probably have lives, school, work, different things like that, right? Hobbies, but you still want to clearly attend Google Spaces, Twitter Spaces. We've had several hundred people come through, if not thousands, just during this time, and we'll probably have thousands more throughout the rest of the week. So what's the best way to know when they're going to be happening? Simply DM either myself, the Wolf account, or Stock Market News with your Gmail preferably, and we will get you onto that Google Calendar. It simply overlays over your personal calendar. You could toggle it on and off. It's the easiest thing. And if you don't like it, you can unsubscribe, but you might love it. So try it. Join 1,600 plus other people, including people who work at Twitter, that are on that calendar just by DMing us right now, making sure that your Gmail is in there. And we'll send you a nice thank you back because we love having people join into our Twitter Spaces family. With that being said, stay safe out in the markets here. I'm currently, the only position I've taken is that Wayfair short. So root for Wayfair to go down along with me. That's all that I've got for today. I'm going to maybe go take a look over this beach because I'm right next to it. And I will be back on Spaces at 6:30 p.m. EST today with a options education space. So if you are thinking about trading options at all, you should be there. Thank you so much, everybody that attended. And Nick, you can go ahead and end the space here.